Some points, Fed minutes give the market plenty to think about, but stocks lack direction. The crypto yo-yo takes another turn with Bitcoin plunging and rallying 30% in the same day. Cathie Wood tells Bloomberg it can still hit $500,000. And the Biden administration changes tone on Nord Stream 2, saying stopping it is a long shot. The State Department also waived sanctions on its builder. Good morning, everybody. Welcome back to the second hour of the European Market Open. Just 15 seconds to go until the start of the European equity trading session, and futures are pointing to the upside. Bear in mind, of course, the European markets lost more than 1% in yesterday's session, so we're expecting to bounce back to make up some of the lost ground against the US, which did recover late in its session, despite what it heard from the Fed around tapering, or at least talking about possibly in the future some tapering. So we'll get into that conversation in just a moment. Let's have a look where we're opening then on these European equity markets, expecting them to catch up with the US a bit. The FTSE 100 opens 0.3% to the upside. The IBEX in Spain up around 0.4%. Of course, this was a bit of a surprise to many of the people we've been speaking to, the fact that the Fed did include these comments around tapering. It is just a number of participants who suggested it might be appropriate at some point in upcoming meetings to begin discussing a plan for tapering. So it's heavily caveated. But the first real mention in these minutes then that this could be on the radar, could be on the agenda in the months ahead. Many people have been talking about this being something of a subject at Jackson Hole, but perhaps this was a little earlier than we had anticipated. Anyway, thinking about where that Fed conversation leaves us and what that does to inflation concerns as we see these markets rebound from the sell-off we saw yesterday, that was driven by those inflation concerns and also by chaos in crypto markets. Inflation fears have been gripping markets of late, but Atlanta Fed President Raphael Bostic says now is not the time for the Fed to withdraw monetary support.
We've never had an experience with a pandemic. There's not a pandemic response chapter in econ textbooks. So we're going to have to be very nimble in terms of our monitoring of the economy and our policy responses. You know, when I think about where we are right now from an economic perspective, the word that comes to my mind is transitional. Like, we've gone through this pandemic, we've seen the loss of millions of jobs, and now we're transitioning out of a pandemic space into more of a recovery space. As we've gotten that public health challenge under control with vaccines and better management of social distancing and other measures, now we can turn ahead. And so we're actually transitioning out of the depths of a pandemic into a recovery period. And it's just a lot of moving parts that we'll have to keep tabs of. What I will say, though, is that I'm expecting a lot of volatility over the next several months. They're going to see fits and starts. You mentioned that in the last several months, we've had data points that have not met up with expectations. I think that's to be expected. And what that will mean is that we're going to have to do extra work. And at our bank, we do lots of surveys of business leaders and communities. And we also do a lot of outreach to have one-on-one conversations with folks on the front lines to get a better sense of what they're seeing, and more importantly, perhaps, how they're thinking about what their strategies are going to be moving forward.
That was Atlanta Fed President Raphael Bostic speaking to my colleague Mike McKee here at Bloomberg. Coming up on the program, remarkable exuberance as the ECB flags elevated risks of financial stability. We'll discuss Europe's recovery. We'll also get our next guest's thoughts on what we heard from the Fed and what that did to expectations for where the Fed goes next and where that tapering conversation comes to the fore. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Welcome back to the European Market Open. 6 minutes past 8, 6 minutes into our European trading session, and we're making some decent gains across these European equity markets. Not entirely bouncing back from from what we lost yesterday, though, as we're fearful of inflation and watching cryptos spiraling downwards. Let's get a sense of what's on the move this morning, though. Danny Berger has a breakdown. Danny.
And a Kingfisher to the move up today, reporting earnings. They're looking strong. They're able to upgrade their guidance as well. It's kind of this DIY effect from the pandemic, and it just shows that that type of behavior is still going strong for a lot of these companies. Now, to the downside is BT Group. They've eased some of their immediate losses that they saw when they opened up. So let me go ahead and show you where the prices are on that stock. Now, this has to do with a rival, or its rival rather, Telefonica. O2 has been given the green light to merge with Virgin Media from UK authorities, so that's sending shares down nearly 1%. Finally, last earnings-related mover for you, Royal Mail, again, seeing its profit increase during the pandemic period. A lot of this has to do with their shift from letters to really focusing on parcels. If they went online shopping, that's good news for Royal Mail, so those shares up nearly 2%. Finally, when it comes to sort of the equity market as a whole, especially looking at U.S. futures so far this morning, it is pretty remarkable that we've seen some resilience. They've started to turn lower, but it doesn't look like it did yesterday. And we saw NASDAQ 100 index, the cash trading, and higher yesterday. So it's sort of this back and forth. But we are continuing to see dip buyers emerge. But we're also seeing some of those higher yields ease off after the FOMC minutes yesterday. And that means that the lowering of yields today is giving the dollar some breathing room to move a bit lower after heading higher yesterday, Anna.
Absolutely, Danny. Thanks very much. Danny Berger with a breakdown of some of the stocks on the move and indeed the macro movers as well. Let's get a Bloomberg Business Flash, top corporate stories here at Bloomberg. Here's Laura.
Thanks, Anna. EasyJet is expecting a summer of gradually recovering demand for travel. It now sees only about 15% of its pre-virus capacity in the current quarter. It previously expected 20% for the first 3 months of the year. The discount carrier reported a loss of £700 million.
There's still very limited visibility beyond, the Q3 that we are in. We only expect to fly around 15% as an example of 2019 capacity in Q3. But the trend is definitely there. And we know that there's a huge pent-up demand for people to travel. So it's all now down to the restrictions being unwinded.
Waymo is said to be talking to outside investors about raising as much as $4 billion in additional capital. The self-driving car company has also discussed plans to eventually list publicly, spinning out from its parent Alphabet. This comes in the wake of a string of recent senior departures, including its CEO, CFO, and others in recent months. That's the Bloomberg Business Flash. Anna.
Laura, thank you. Laura writes in London. Now, European equity markets then trading a little bit higher this morning, getting a chance to react, of course, for the first time to those Fed minutes, but actually pricing in some of the gains that US markets, well, the losses and then subsequent gains that US equity markets made, despite the taper talk. Taper talk is potentially on the table as early as next month from the Fed. That is according to the Fed's minutes from its April meeting. Officials held interest rates near zero and pledged to continue their massive bond purchases until substantial further progress had been made on their employment and inflation goals. Joining us now is Sarah Hewen, who's with us this morning, Chief Economist for Americas and Europe from Standard Chartered. Sarah, good morning to you. Let's start with the Fed conversation then. It seems as if markets reacted in a sort of knee-jerk way to mention of taper for the first time and then read all the caveated language and tried to work out, okay, how many is a number of participants, and then relaxed a little bit in the market's response. What did you learn yesterday? What was your takeaway from the Fed minutes?
Yes, I mean, it was the first signal, I suppose, the very first tentative steps towards ultimately tapering. But the language was very, very contained. A number of Fed members, if we make a comparison with the language that we had from Ben Bernanke back in 2013, where he laid out, in the coming meetings that, what the Fed would do, that the Fed would take steps to taper, then we're still quite some way even from the discussion. In our view, it's likely that the tapering discussion doesn't really kick off until July at the earliest, or possibly it starts to pick up at the Jackson Hole meeting in August, or even as late as September. It's going to be very data dependent. Let's see what we get from the next round of jobs and inflation numbers. I think those will be key determinants.
Right, and so, in a sense, did you already know what was in the meeting, the minutes that we heard about yesterday from the Fed? Did it shift those expectations at all? You talk about the tapering conversation happening then in the summer, Sarah. Was that always your view? And yesterday's commentary from a number of participants just reaffirmed that would happen?
Yes, I think broadly that's the case. But we have also, of course, since the Fed meeting, had some very clear commentary from Clarida in particular that the tapering discussion is still some way off. Powell in the post-meeting press conference also talked about tapering discussion not being on the table yet. So I think that we have to really bear in mind that from the Fed's perspective, there is not yet substantial progress being made towards the Fed's targets on employment and inflation, and therefore the tapering discussion is indeed not imminent. And I think that although there was a sort of first signal that some members certainly believe that the discussion could be on the agenda in the coming months, that's a very, very gentle lead into that discussion. Ultimately, we know it is going to happen. We're expecting that tapering will start in the first quarter of next year, but that still gives plenty of months ahead for that discussion to take place.
Yeah, an important early staging post, perhaps, in the run-up to those conversations. Thinking about the data, you said that we're going to be data dependent, and you're watching the jobs data and the inflation data, of course. Where do you look for meaningful clues, Sarah, as to how much the US economy, if we stick with that, is recovering and getting back to what it was, in a sense? I mean, do you compare year-on-year data on jobs, on inflation, or is there a way to go back to 2019 and think about how we are recovering in that context? Because, of course, the growth numbers might look impressive, but they certainly won't tell the whole story.
Yes, we definitely have to look at the baseline. The growth numbers are inevitably going to be impressive given the very, very sharp downturn that we saw this time last year. So the question is, how quickly do we get back to the pre-pandemic level of the economy? I mean, that's very imminent, but also at what point do we get back to a trend rate of growth? Now that may be several quarters away, and for the Fed and I think for most analysts, the employment situation is absolutely key. Although we've seen very dramatic increases in payrolls over a number of months, albeit not the last report, the number unemployed is still many, many millions. And in the meantime, of course, the working age population will have increased. So it's not enough just to go back to the pre-pandemic employment level. We need to see even more jobs gains to really be back at that full employment situation. Now, we think we'll get there, but not until 2023. So that's the point at which we think the Fed will start to really raise rates.
Okay, and so that's why you've got those Fed rate hikes in the first half of 2023. Sarah, let's pause the Fed conversation and move the conversation on to Europe and hear from another voice or two. The ECB is warning of elevated risks to financial stability as the bloc emerges from the pandemic. It's cautious of the high debt burdens on the continent and what it sees as remarkable exuberance in markets. Still, the central bank's vice president, Luis de Guindos, is relatively upbeat on the economic outlook despite the risks. This is what he said.
Risks looking forward and going forward are much more balanced than in the past. On the one hand, you have the speed up in terms of vaccination. Vaccination is gaining momentum everywhere in Europe, and we are catching up. We are reaching the gap, as I said before. On the other hand, you have risks and uncertainties. The variants of the virus.
Luis de Guindos speaking to us at Bloomberg. Sarah, coming back to you on this then. So the ECB warning yesterday about remarkable exuberance in markets. I mean, I don't know if there was probably an intended throwback to Alan Greenspan and his irrational exuberance. Do you think that the levels of exuberance we see in markets are something that central bankers need to worry about? I mean, does the ECB need to worry about this?
Yes, I mean, ECB and all central banks will be concerned when, if there are situations where asset prices seem to be overinflated. And the worry is, of course, particularly given the backdrop of substantial levels of debt, public and private sector debt, having been built up during the pandemic, that, the economy is less able to withstand a reversal of asset prices. So it's natural that policymakers will be concerned about that. Now, let's look at what the risks are out there. The main risk is that we see a run-up in inflation, which drives interest rates substantially higher, much higher than markets are expecting, and sooner than markets are expecting. And then under those circumstances, highly debted governments, highly debted companies will start to run into difficulties. It seems as if we are still some way away from that. There's plenty of slack, despite the rapid rates of growth that we're expecting over the next few months. So we don't expect to run into those sorts of issues.
How geared do you think the European economy is to US stocks, though, Sarah? Because I was interested in this line in their report yesterday, a 10% drop in US stocks, which is not unfathomable, I suppose, would tighten financial conditions to such an extent that it would risk derailing the European recovery. Is that the level to which these things are linked then? That's quite a linkage.
Yes, it's an interesting linkage, and I would question the extent to which that would have such a knock-on effect to the broader euro area economy. In the US, of course, the sort of stock holdings are a greater share of household wealth, and that's less the case in the euro area. But I think it's more the disruptive impact of such a dramatic 10% decline in stocks. We've been there before, and we know that, you know, if you get such a drop without a subsequent leveling off or recovery, then there are repercussions. So policymakers have to be very sensitive to that. It's a difficult tightrope to tread that would lean towards keeping policy accommodative, but at the same time, you don't want to further fuel the fire.
Let me ask you where you expect bond yields in Europe to go, Sarah. We've seen the bond yields have been edging higher in recent weeks, some anticipation of economic recovery and a lot of talk about when we're going to start to see more positive bond yields across Europe. From an economist perspective, what are you expecting to see in that bond market story that will also weigh into the ability of these European corporates to continue to borrow and survive?
To be honest, we've seen a faster run-up in bond yields than we had expected. We were really looking for broadly stable Treasury yields, and that indeed has been the situation. So looking for Treasury yields to stay in that 150 to 175 range over this quarter and the next quarter, and then rising up towards the sort of 175 to 2% range after that. With bunds outperforming treasuries we'd expected. What seems to have happened is that the a new optimism over the region, over Europe is building up. You know, quite rightly so, given the success and the acceleration of the vaccination program. We're a little bit hesitant about the variant that emanated originally from India. We've seen that's having an impact here in the UK, and we know that it's only a matter of time before it starts to make its presence felt across the euro area. So the opening up story is broadly on track, and the economic recovery is on track. Bond yields are reflecting that, but we do introduce a note of caution here. The pandemic is not yet over by any means.
Sarah, thanks very much. Thanks for giving us your thoughts. Sarah Kewen, Standard Chartered Chief Economist for Americas and Europe. Sarah will be continuing her conversation with us on Bloomberg Radio at 9 a.m. UK time. That's where I head in around 40 minutes from now. Coming up, though, on this program, a long shot. That's what the US government calls efforts to stop the Nord Stream 2 gas pipeline. We'll get that story, relationships between the US and Germany, very much to the fore. This is Bloomberg.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
If Russia acts aggressively against us, our partners, our allies, we'll respond. And President Biden has demonstrated that in both word and deed, not for purposes of escalation, not to seek conflict, but to defend our interests.
That was U.S. Secretary of State Antony Blinken speaking after his meeting with Russian Foreign Minister Sergei Lavrov on the sidelines of the Arctic Council in Reykjavik. Shortly before yesterday's meeting, the U.S. waived sanctions on the company overseeing construction of the Nord Stream 2 pipeline. The Biden administration called efforts to stop the project a long shot now that the gas pipeline from Russia to Germany is 90% complete. For more on this, joining us now is Bloomberg reporter Birgit Jenen. Birgit, good to speak to you. So this sudden shift then from the United States, kind of saying we're not going to get to stop this. Look, it's 90% there already. Was it all designed to bring the US and its traditional European allies like Germany closer together ahead of this conference where the US and Russia would be talking about this?
Yes, I think the bigger picture is really that after the Trump administration, which had a very tense relationship with Germany on a million of issues or a lot of issues, but including and in particular also about Nord Stream, that the Biden administration is now clearly sending a signal saying to Germany and to the European allies, look, we want to work together. We don't want to make this issue, the Nord Stream pipeline, such a stumbling block in our global efforts. It reaches from finding a way out of the corona crisis towards climate and obviously also China. So this is a clear signal to say, look, we are going to have a new start and we will continue talking about Nord Stream in the long run.
Continue talking about Nord Stream. They're having a new start, a new reset, if you like, maybe for this particular relationship between the US and Germany around this specific pipeline. What's the importance then of the Nord Stream pipeline in the region? Of course, it's been many, many years under construction, and providing an alternative route for getting gas from Russia to Germany.
Well, for Germany, obviously, it's largely an economic project. Basically, Germany needs this cheap gas from Russia in the medium term, at least until the transition towards new energy has been reached and fulfilled. So for Germany, the gas is really of economic vitality, yeah? But politically, and the U.S. argument has been, and rightly has been, that obviously in the region it's not just an economic, it's primarily a political instrument from Russia to basically keep Germany linked towards Russia and basically make Germany dependent on Russia. So there is this double meaning and of the Nord Stream pipeline, and this has to be somehow solved in the long run.
Yeah. Yeah, Birgit, thanks very much. Bloomberg reporter Birgit Jenen giving us the latest news flow and the important backstory around Nord Stream 2. Now, coming up, the crypto yo-yo. Bitcoin loses more than 30% of its value in a morning and then surges more than 30% in the afternoon. What is next for the digital currency? That conversation next. This is Bloomberg.
traffic.
Okay.
During the pandemic, no traffic.
Okay. Where do you see the oil market in about 20 years or so?
Non-existent.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open, half an hour into our trading session for this Thursday morning, and European equity markets bouncing back to some extent from the losses of yesterday. So we've got European equity markets up by 0.7 or so of a percent. US futures look a little more negative, but really Europe is playing catch up with the latter part of the US session yesterday. Nasdaq futures now down by just 0.1%, so moves they're sort of flat to negative in the US. Let's have a look at things from a sector breakdown perspective. And yesterday, this time, everything was red, so we were in negative territory for all of these sectors. Today, almost everything is green. We just have the insurance sector moving to the downside, and the insurance sector seemingly weighed down by some news flow surrounding Sampo. So Sampo and Nordea, there's some news flow surrounding that, and we see the Sampo share price considerably weaker. On the other side of things, technology is the biggest gaining sector. We see, sticking with that part of the world, in fact, Nordic Semiconductor is up by 10.6%. There's been speculation about M&A activity within that sector, including with regards to that company, and so as a result we see that particular sector going higher. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. There are reports that Israel and Hamas are nearing a possible ceasefire. The New York Times says the fighting could stop within 2 days. The Wall Street Journal says potentially tomorrow. It comes amid increasing pressure from the US to de-escalate the conflict. So far, 219 Palestinians have died and 12 Israelis. Some officials at the Federal Reserve are open to a debate on scaling back their massive bond purchases at upcoming meetings. That's according to the minutes of the April meeting. A number of policymakers said the economy was making rapid progress toward the central bank's goals. But that was before the disappointing April jobs numbers. As people return to the office, the UK is rethinking commuter travel. A new flexi season ticket will be available for people who only go to the office 2 or 3 days a week. And in the biggest overhaul since railways were privatised 25 years ago, the government is creating a new public body to better integrate the network, Great British Railways. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Thanks very much, Laura. And in conjunction with the story that Laura was just talking about there, I just want to mention that Trainline, which is a business in the UK that sells tickets for trains, their business model seemingly under threat then from the story that Laura was just referencing there, and that stock down more than 18% in today's session. Let's get a look at something else that's been a bit of a wild ride recently, and that has been the crypto markets yesterday. Bitcoin at one point plunged more than 30%, and later in the afternoon it surged more than 30%. The action erased billions in value. Today prices are more stable, thankfully, with Bitcoin back above $40,000. I shouldn't say thankfully, Danny, should I? Because, of course, some people like the volatility. But here's Bloomberg's Danny Berger with a look at what's been driving the action. You've been digging through the action of the last 24 hours. Who's been selling and who's been buying then?
Yeah, maybe thankfully for all of us who are trying to keep track of whether the price is at 40,000 or 30,000. I mean, it was really remarkable to see. And in terms of sort of the driving players, who's buying, who's selling, there certainly was a retail flavor to it. Mark had Lattimore mentioned in the last hour that we didn't see too much contagion, which suggests that it was really contained in the retail aspect. We also had a lot of the various exchanges, be it Binance or Coinbase, go out of service for a while, which again suggests all the activity there. But it's also likely that a lot of leveraged players were stopped out. So maybe this is the more institutional sort of aspect to it. So this is the VIX, basically the same kind of calculation that's done on the VIX, done on Ethereum and Bitcoin. I have to say these volatility numbers are really wild and presumably would force some people out. So we see Bitcoin in the white here. It goes above 100. Ethereum goes beyond 200. I mean, these are really big numbers that would be difficult for anyone to digest. Now, in terms of the buying, you have a lot of sort of the big crypto bulls, sort of the three horsemen of the crypto world really talking their book. And around when they were making these comments, this also helped Bitcoin yesterday and is continuing to fuel gains today. You have Justin Sun of BitTorrent saying, I just bought. He talked about buying both Bitcoin and Ethereum on Twitter. You have Cathie Wood speaking to Bloomberg saying that she still sees it going over 500,000 despite the fact that there was capitulation yesterday. And of course, Elon Musk, there's always a tweet from Elon Musk when there are big Bitcoin moves saying Tesla has diamond hands, Anna.
Yeah, absolutely. Now, I'm going to ask you a question that is probably impossible to answer, Danny, so brace for that. What is next then here? What are the key levels and catalysts that we're looking out for? And I'm asking you about levels, I suppose, because a lot of what you read around Bitcoin resorts to the technicals because it is so driven by celebrity endorsements, celebrity commentary, celebrity tweets, and by regulatory concerns. And we've seen both of those holding sway over this cryptocurrency over recent sessions.
Yeah, well, you know, in regards to the regulatory concerns, it was really interesting because, you know, in talking to different analysts yesterday, you have some of the big Bitcoin bulls, for example, Julian Emanuel of BTIG saying, okay, the one thing about Bitcoin that could get it is regulation. And maybe next, the regulation concern comes from the Biden administration, so not China. And even so, you have the bulls worried about that. You have the bears. For example, UBS Wealth Management does not like Bitcoin, and they say, okay, regulation is one of many concerns. So that really has been brought to the forefront. Now, in terms of levels, we are back above this 200-day moving average. It's one we watched a lot. I mean, look, yesterday we fell below the 200 moving day average, and to any chart watchers, that would suggest losses are worse from here. But maybe we just go back to that 40,000 key level. The fact that we're back above that now, maybe that will encourage people to go back in, buy the dip, hoping that yesterday wasn't a turning point. It was just a bad day.
Just a bad day. Danny Berger with some technical wizardry around Bitcoin. I was drawn to one of our colleagues on the Markets Live blog saying if it wants to be a haven, then it will have to be accepted in the world's second largest economy, referencing China. So we'll see whether we do see any regulatory threat to the crypto space from the Biden administration. 8:36 here in London. Let's stick with this theme. The wild crypto roller coaster has taken its toll on the world's biggest digital asset exchanges. Both Binance and Coinbase suffered service outages amid the volatility. Danny was referencing that, with Binance in particular forced to temporarily disable Ethereum withdrawals. US CEO Brian Brooks told Bloomberg that the company is still working to address remaining issues.
The platform is amazingly resilient. We transacted almost $3.3 billion on our spot exchange in the last 24 hours, which I think is an all-time record for the exchange, and it's held up very well at a time of rapid transaction. The issue we have, quite frankly, is that we have way too many customer support issues on backlog, and I want everybody in the Binance US community to know we are all over this. I mean, we have 3 or 4 major initiatives that are going to fix that in the coming weeks and months. One of them, Romain, is we hired one of the most noted leaders of customer experience in the technology industry, a person who took Comcast from one of the worst customer experiences in America to having one of the highest net promoter scores of anyone in America. She's joined Binance US to fix this. We've got a self-service kiosk coming online very shortly that's going to allow people to solve their own problems for the 5 or 6 most common reasons that they're sort of having a hard time onboarding. And we're migrating risk logic from an international platform to a US-based platform so we can control the kinds of risk changes right here in the US that are causing some people to have access issues. So I know it's a big deal. I've got that feedback, but we're all over it, and you're going to see a different customer experience very shortly.
All right, it's certainly a big deal. And one of the reasons why we have you on, one of the reasons why we're having this conference is because over the past year, really the past couple of years, we've seen this migration to, I guess, what once were alternative assets that to a certain extent have now become mainstream assets. But being part of the mainstream also means that there needs to be some degree of stability or at least some degree of predictability, at least on a relative basis. Does cryptocurrency actually have that?
Yeah, Romain, it's funny. I was looking before this interview at the chart of how the Dow Jones is performing today. And the Dow Jones is in a straight line, I don't want to say it's in a free fall, but it is a straight line down over the last 24 hours. And somehow nobody's reporting that story. Same thing with the US dollar, which has been debased to the tune of about 40% over the last year. That's why you're seeing historically insane inflation levels. But nobody's writing that story either. They write about crypto because it's new, and they assume that the status quo is kind of the risk-free zone. It really isn't. Markets are going down right now because there's a lot of strange things going on in the world globally, in the world U.S. domestic policy, and crypto is one of the victims of that. But it's not the only. It's not the only. I mean, volatility is inherent in investment market. We're going to see it here too.
Absolutely. Absolutely. But the volatility that we see in the Dow, the dollar, and some other assets, typically the drawdowns that we see there tend to be, I guess, a little bit more restrained here. When you have 30% drawdowns in a single day here on an asset, I don't know if that's fair to make a comparison to some of the drawdowns that we've seen in the dollar or in equity markets.
Yeah, it sort of depends on what your risk tolerance is. I mean, if you're a retiree living on a savings account, I think the decline in some of those other assets are just as big a deal as part of your day-to-day as they are for crypto investors. But at the same time, Romain, we have to ask ourselves, why is this going on in crypto? And the answer is sort of severalfold. I mean, one is there's a fair amount of misinformation going on in these markets. So, from Elon Musk tweeting to misinterpretations of what China actually said yesterday, those things get filtered in a very weird way. And even more important in this country, we haven't yet built a two-sided crypto market yet, the way that we have it in every other traditional asset class. In the United States,
what do you mean by two-sided?
So what I mean is you can basically only be long crypto in this country. You can buy Bitcoin or you can sell Bitcoin. What you can't do is engage in Bitcoin futures, derivatives, swaps. These are things that bring price discovery and stability over time. And we need to get regulators comfortable that those kinds of things are positive, not a negative in this asset class.
That was the Binance US CEO, Brian Brooks, there speaking to Bloomberg. And staying with digital currencies, today's big take story at Bloomberg focuses on tales from the fringe of the crypto craze. From Dogecoin and beyond, cryptocurrencies with bizarre meme-based names have moved into the mainstream and even excited institutional investors, some of them anyway. Joining us now for more is our reporter, Charlie Wells. Charlie, thanks for bringing us your really interesting story today. I know a lot of people think elements of cryptocurrency are a joke, and we talk about some that started as jokes, but your story is about coin billionaires with a token that stands for, you'll have to do the acronym yourself, Australian Safe Shepherd. What is going on here? What's this one all about?
Good question. So I'm really going to have to watch my language in this interview because there's a lot of sort of joke coins that actually have curse words as their titles. And so basically what we report on is a sort of new phase in the crypto and retail trading movement. So we've all heard about these retail dollars going into stocks and some crypto, including Doge. But this phase is really one sort of about self-awareness of how much of a joke this seems to some people, particularly after the rise and fall of Dogecoin and even the seemingly kind of inexplicable rises and falls of crypto prices. So in particular, we talked to a buyer of these Australian Safe Shepherd coins, and what he basically told us was he was unemployed, he got burned in the Robinhood GameStop rise and fall, he got burned on Dogecoin, and he had this epiphany, and it was, this is a joke. I'm just going to go after some of these coins that seem like they belong in the garbage can. And that is his thesis, to sort of follow the crowd, crazy as it might seem.
Okay, so he got burned, and then he got burned. He realized it's a joke, and instead of stepping away, he decides, well, I'll just join in and have my own joke. At the heart of the more serious side of this, I suppose, is conversations around decentralized finance. And there are some who just want to ride these wild rides, and there are others who really believe that this is the future of some sort of decentralized financial system. So what is that world that we describe when we use that phrase?
Yeah, that's a really good point. So this is a sort of ecosystem that is, even more decentralized than, say, Bitcoin. So, a few years ago, in order to create a viable token, you would need to please sort of like a Coinbase or a Binance, which of course we were talking about earlier on the show. But in this world of decentralized finance or DeFi, people can create new coins with these, even stranger names than Dogecoin, with, limited money, limited resources, and start selling them to people and promoting them. And in this story, we talk about this sort of system of creation and then promotion, trying to reach out to digital influencers to drive up the price of these sort of crazy sounding coins and to create that sense of FOMO that, of course, we've been talking about for months now.
Charlie, thank you very much. Thanks for bringing us your story. Our reporter, Charlie Wells. For more on that big take story, you can head to the terminal. Coming up here on this program, vaccine hesitancy may threaten Hong Kong's status as a financial hub. We'll get that story for you next. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Welcome back to the European market open, 8:47 in London, 9:47 in Paris and Berlin. And we see European equity markets making some decent gains to the upside. And actually, the US picture improving just a little in the last half hour or so. And NASDAQ, E-mini and Dow futures have been negative, modestly negative through much of this early European trading day. And actually now NASDAQ futures just turning positive. Now, the vaccination rate in Hong Kong is lagging other financial hubs like Singapore and New York, despite relatively few cases and a widespread free vaccination rollout. Could that erode the city's competitiveness and permanently change the course of its future?
Fewer than 15% of people have had their COVID shots in Hong Kong, and that has the business community worried.
Other areas of the Asia-Pacific region, including Singapore, are moving ahead.
Hong Kong can fall behind if it doesn't do that as well.
Quarantine measures are among the strictest in the world. which Tara Joseph sees as a major issue for expats who have gone months, even years without seeing loved ones.
It becomes a factor in mood, and it starts to make people wonder if they're going to be stuck here and whether it's actually worth it.
Relocation agency Asian Tigers is recording fewer international arrivals.
We're almost 60% down on the number of inbounds, and that's very dramatic,
prompting calls for more guidance from government.
Could we have some KPIs, an idea of how you are going to open up again and not haphazard planning because it makes it stressful and more difficult?
You need to pronounce a clear pathway to open borders.
I think we all would kind of wish they would move on a little to relax things a little bit more, a little bit faster.
Some criticize rules for being inconsistent.
There's still a lot of gaps and a lot of unfair situations in government policy today.
And there are question marks over whether business should mandate staff vaccinations.
Folks who work in the F&B industry understand that that is required to do their business, so they may be able to push the envelope a little bit further. But of course, Western companies here will value individual rights.
I'd like to see a better take-up. I'm a little bit reluctant to cross that line into saying the business should do it, because they have genuine concerns.
After a tough few years for Hong Kong, vaccine hesitancy is complicating the path forward.
In the next half year or a year, the pandemic will be up and down because government policy is not there yet.
We could have a situation where private bankers and asset managers and people running IPOs and so on will want to be in Singapore rather than in Hong Kong.
I think there is going to become a shortage of labor and for certain specialized roles. We haven't seen it yet, but I think it will start to happen.
We are going to see a continuing of this inflection point where people are going to be questioning, what is Hong Kong? Where is Hong Kong going?
Annabelle Jewellers with the latest on the vaccine rollout in Hong Kong, adding perhaps to a complicated picture for the international community when it comes to dealings with the city. Coming up on this programme, another wild ride for the crypto market. We'll discuss what's been driving the action with Bloomberg Market Live. Who's with us next? This is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European Market Open. 53 minutes into our trading session, modest gains, decent gains across European equity markets this morning. Let's get to Laura Cooper from the Markets Live team here at Bloomberg, where she's a macro strategist. Of course, Laura, good morning to you. Resilient markets, perhaps, in the face of all sorts of things being thrown at them. A crypto roller coaster, the Fed talking about tapering maybe a little bit earlier. We see generally some resilience, a bit of a bounce back from yesterday's selling here in Europe.
Yeah, and I think really the price action just tells us just how much sentiment is really driving these markets beyond any kind of fundamentals. And I think with specifically when we look at Bitcoin, we did see just those wild volatility yesterday, and that captures the risk really around these over-leveraged positions and the fact that these margin calls prompted this liquidation, and then that therefore saw this spillover across assets as well. So today we are seeing a bit of a reprieve on that front. We are seeing tech bounce back once again in Europe, and then commodities as well. We're seeing some support there. So really a combination of factors, I think, are supporting risk appetite today, but I would expect bouts of volatility still to come.
And what were your conclusions after listening to the Fed? It seemed as if the markets reacted with a kind of knee-jerk reaction, spotted the word taper, and we saw what you would have expected to see. Yields went higher and stocks sold off. But then thought about it a little bit longer and tried to work out, how many is a number of participants, and does this really change what we knew already around the Fed's path through 2021? What do you take sort of longer term now, with some time to reflect on those Fed minutes then, Laura?
Yeah, so the market reaction, the knee-jerk market reaction that we saw, I think came from the fact that, we were surprised that the Fed is actually talking about potential tapering, because that comes after Powell explicitly stated that now is not the time. But I think, as you mentioned, it's really around context. So there's anonymity in terms of those FOMC minutes. We don't know who said what, and that matters. If we look at the Fed's Bullard to Clarida to Brainard and to Powell, they're all saying that we haven't seen substantial progress yet on the economic recovery to warrant that tapering, and then is conditional. So they expect, rapid progress is needed before they actually can taper. And the FOMC minutes came ahead of those recent weak prints that we've seen in the labor market and those retail sales. So I do think it's probably a little bit too premature for markets to react to that tapering, but certainly I would expect that it's going to come later this year, given the still strong growth backdrop. And I do think, potentially by Q4 is what really markets are watching for.
Laura, thanks very much. Laura Cooper, Bloomberg Markets Live macro strategist. Thanks very much for joining us. That is it for the European Market Open. Surveillance Early Edition is up next. European equity markets then making those decent gains, rebounding from a 2-week low across European equity markets. That as US futures look fairly flat this hour. So the day after we saw a big sell-off and then a rebound stateside in the wake of that crypto turmoil and the Fed's minutes, we're flat on US futures. This is Bloomberg.
we're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there has been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada is going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
If we see that substantial, significant progress, I'm advocating that we move our policies tomorrow.
We go through soul-searching times like this and scrape the models, and yes, our conviction is as high.
They write about crypto because it's new, and they assume that the status quo is kind of the risk-free zone. It really isn't.
This is Bloomberg Surveillance, Early Edition, with Francine Lacroix.
Well, good morning, everyone, and welcome to Bloomberg Surveillance, the early edition on this Thursday, 20th of May. I'm Francine Lacroix in London, and here's what's coming up on today's program. A recipe for disaster. Cryptocurrencies remain under pressure after Elon Musk and the PBOC tank the entire asset class after a swathe of dip buying. Is there more room to fall? Open to tape where Fed minutes show a willingness from the U.S. Central Bank to discuss scaling back purchases in coming months, while U.S. futures point to narrow losses at the open. And brokering a ceasefire, reports suggest that Israel and Hamas may reach an agreement to cease hostilities tomorrow after heavy pressure from President Joe Biden. So first thing is first, crypto assets seeing a whipsaw session yesterday. I mean, it was really quite volatile, plunging by a third, then jumping higher by about the same amount. Bitcoin and Ether have seen the biggest declines this week after a slew of negative catalysts. First, Elon Musk complained about Bitcoin's fossil fuel usage. Then the People's Bank of China added fuel to the fire by reiterating that digital tokens cannot be used for payments. Well, let's get more with Bloomberg's Danny Berger. Danny, you've had a busy week. You know, if you're invested in Bitcoin, you would have had a pretty exciting, if not terrifying week. Digging through the action from the last 24 hours, who's been selling and who's been buying?
I mean, in the words of Kathy Woods, Francine, it was outright capitulation. So I think it's fair to say that there was a pretty sizable mix of both retail and institutional. One key thing that shows it's kind of more towards the retail side, though, was the fact we didn't get a lot of contagion. So that's good news. It means that it's probably not people with maybe a very widely diversified portfolio. We also had a lot of the retail exchanges down. There is evidence, though, that the leveraged players probably got stopped out to some degree yesterday. So I have up here, it's basically how the VIX is calculated, but for Ethereum and Bitcoin. So Ether is in the blue here, and that one especially has these wild levels of implied volatility surging above 200. Bitcoin goes above 100. So this here would suggest that some of the more institutional players with a lot of leverage behind them probably fed into the downside. Now, in terms of who's buying, we got this big boost yesterday from sort of the likely suspects, people who are more or less talking their book and are the big Bitcoin bulls. We have Justin Sun, the CEO of BitTorrent, talking about on Twitter he's buying not just Bitcoin, he's buying Ether. Kathy Woods talking to Bloomberg saying that Bitcoin's still going to 500,000, and Elon Musk Francine, of course, there is always an Elon Musk tweet when there's Bitcoin movement saying that Tesla has diamond hands.
Please tell me there's like at least one Elon Musk tweet and about 55 memes that go with it. But on a serious level, what's next? So there are some, are there key levels? Are there catalysts that we're looking out for?
Well, when it comes to the levels, this is something people always look out for in Bitcoin because it's not something that exactly trades based on fundamentals. This 200-day moving average is one that we've really been tracking a lot because it dipped below it yesterday. And the thought was, okay, because it's below this moving day average, it's going to go even further. Momentum's to the downside. Well, look, we hit 30,000 and it goes back up. So maybe this is the floor. We're back up above that moving day average now. In terms of other catalysts, I've heard from both bulls and bears on the Bitcoin space saying that this regulation fear is one that's going to continue to be with us, that maybe next we have concerns from the Biden administration. So it's something that's ever present, and especially we're reminded of it because of what China said the other day. But the hope here is that yesterday was just a bad day, not a turning point for Bitcoin, Francine.
Thank you so much. Our Danny Berger there looking at all the crypto moves. Now, in the height of yesterday's wild swings in crypto asset prices, we spoke to the perennial Bitcoin bull, Kathy Wood. The ARK Investment Chief Executive says she still sees Bitcoin hitting her previously slated target of $500,000.
I think what's happening right now is because the stock market, the highly volatile part of the stock market, the innovation-oriented part of the stock market has gone through such a correction, which has been flamed by inflation fears. I think the correlations among volatile assets are going to one right now, and that's including Bitcoin.
So Bitcoin, I mean, you at one point, I think back in April, told Dow Jones that it could go to about $500,000. Do you still hold that target? Do you still think that's where we're headed?
We do. I do. Yassine El Mandra is our crypto analyst, and we go through soul-searching times like this and scrape the models. And yes, our conviction is as high. The one thing that has changed here, however, is the environmental concerns around Bitcoin in particular have caused people like Elon Musk to pull away and say, whoa, 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 let me make sure I understand this. And we believe that even this is going to change because, first of all, right now, the percentage of Bitcoin mined with renewables and hydroelectric power is quite substantial. I think in China, it's over 50% in renewables. We believe that Bitcoin mining integrated into the distributed grid, and by that I mean solar roofs, power walls in homes, utilities, merchant power producers, starting to include Bitcoin mining in the ecosystem. Why would they do that? They would do it because renewables are intermittent power sources, right? Weather, is it sunny or not? Wind, is it windy or not? And Bitcoin mining could take off if there's excess energy from solar being loaded into power walls. It can be offloaded into Bitcoin mining, and the whole ecosystem, therefore, becomes much more economic.
Well, that was the ARK Invest Chief Executive, Kathy Wood, speaking to Bloomberg's Carol Massar on why she still believes Bitcoin will reach $500,000. Now, today's Bloomberg Big Take focuses on tales from the fringe of the crypto craze, from Dogecoin and beyond. Coins and bizarre meme-based names have moved into the mainstream, and even excited institutional investors. Well, joining me now is Charlie Wells, one of the reporters responsible for today's Big Take. Charlie, I know, first of all, congratulations on a fantastic story. It was a great read. I know a lot of people think that elements of cryptocurrency are a joke. Your story is about coin billionaires with a token that stands for Australian Safe Shepherd. What's going on here?
All right, so I'm going to have to watch my language in this interview because we were reporting from, as you said, the fringes of the cryptocurrency world, where some of these new coin names have, quite vulgar names. And basically, we were picking up on this sort of new phase in the crypto and retail trading movement. So we've seen the swings into Robinhood. We've seen the sort of GameStops. We've seen the rise of Bitcoin, and we've seen the rise and fall of Dogecoin. And a lot of retail traders are now starting to feel like this entire thing is a joke. And they're starting to not necessarily do research, look at coins that can generate sort of that FOMO feeling on social media, regardless of underlying fundamentals. And they're self-aware of how crazy this all is. And so we were picking up on that shift that seems to be taking off, especially after yesterday, when you saw these seemingly inexplicable rises and falls in the price of Bitcoin.
Yeah, and Charlie, as you say, I mean, we have to watch our language because some of these coins are actually, I mean, they're kind of funny, right? I mean, we can't say it on air, but some of them are funny because of the acronyms. Now, you also talk about decentralized finance. What is it that this world you're describing?
Yeah, so it's really interesting. So, a lot of us, talk about Bitcoin, we talk about Ethereum as this sort of decentralized world. This world of decentralized finance, or DeFi, as it is referred to in the world, is even more decentralized. So it's people at home who are literally using a few $1,000s, some lines of code to create these smaller, sort of kookier coins, and they don't necessarily need to even persuade these centralized exchanges that we hear a lot about, like Coinbase or Binance, in order to list their coins and have people buy them. And then, of course, there is this part of the promotion, where in this world of decentralized finance, getting influencers to try to create that fear of missing out that I was talking about is a really important part of the model.
Charlie, thanks so much. Charlie Wells there, one of the reporters responsible for today's Big Take, and you can find it on our website or on the terminal as well. I've also pushed it out on social media. Now, coming up, the Bitcoin pullback wipes out 700,000 accounts holding more than $8 billion of assets. Is there more to come from the crypto drawdown? We'll have more on that. Plus, Fed minutes show an openness to taper talk at upcoming meetings. We'll discuss the outlook with Bruin Dolphins' Janet Mooney. That's coming up next, and this is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News with Leanne Gehrens. Hi, Leanne.
Hi, Francine. There are reports that Israel and Hamas are nearing a possible ceasefire. The New York Times says the fighting could stop within 2 days. The Wall Street Journal says potentially tomorrow. It comes amid increasing pressure from the U.S. to de-escalate the conflict. So far, 219 Palestinians have died and 12 Israelis. With Nord Stream 2 90% complete, the US thinks stopping the gas pipeline is a long shot. In a report to Congress, the State Department says the link between Russia and Germany is sanctionable under US law, but that the White House would waive the penalties for national security reasons. An official says the president wants to avoid a confrontation with Germany over the project. Here in the UK, Prime Minister Boris Johnson says he's increasingly confident that vaccines are working against all coronavirus variants. It's raising hopes that the last lockdown rules will be lifted as planned next month. The spread of new mutations of the virus had sparked concerns that the government would be forced to delay its plans. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, Bitcoin and Ether remain under pressure after a bruising U.S. session that left much of the cryptocurrency community in shock. On top of negative comments from longtime proponent Elon Musk, the PBOC added to negative sentiment. And yet, that still may not explain the rout that took place on Wednesday. Many were buying virtual currencies on leverage, which leaves them vulnerable to sharp drops in the market. Now, in the past 24 hours, more than 700,000 traders have had their accounts liquidated, equal to more than $8 billion of crypto. Well, joining us this morning to talk about the markets, but first, actually to start with crypto, is Janet Moy, Investment Director at Brewin Dolphin. Janet, as always, thank you so much for joining us. We need to talk about the Fed, about tapering inflation, but first, what exactly is happening to crypto, and what does it mean for what you're telling clients?
Yes, hi, good morning, Francine. Thanks for having me. Well, the only thing that is certain about crypto is that it is highly volatile. What we've seen in the past days is that there has been a slump and then a subsequent rally, and it is just all over the place. Definitely roller coaster ride for investors. As an asset class, I think it is too volatile and too risky for our clients. So our view has been that we are not dealing with for clients on cryptocurrency. I think that, companies are focusing a lot on ESG aspects, especially on climate change, on the impact of the environment. So the point that Elon Musk made about the environmental impact on from Bitcoin mining is definitely something to think about for these large corporates, because a very key argument for Bitcoin going mainstream is that there will be lots of corporate adoption into the balance sheet for Bitcoin. But thinking about how actually corporates care about ESG and the environment, I think it is an argument against actually having Bitcoin in the balance sheet. So I think with more regulation potentially coming, more scrutiny on the Bitcoin, I think the asset will continue to be very volatile and risky for many investors.
Janet, what do you think becomes, what happens to Bitcoin? Is there going to be something else at some point that will be regulated and stable? Or do you think actually Bitcoin could evolve to become that cryptocurrency?
Yeah, I think it will take a very long time for that to evolve. Well, basically, the thing is Bitcoin or crypto, it doesn't really have a real use in the real economy. You can't use it to buy a sandwich in the shop. You can't actually spend it very freely like a fiat currency. So until we see that, it is unlikely to become a mainstream investment. But I think for some investors that have the appetite for volatility and the perception that Bitcoin can actually generate high return because of its limited supply and the excitement that it is new blockchain technology out there, I think there would be a place for some investors that have high risk appetite. But to the point where Bitcoin is going to be a mainstream asset or being used as a fiat currency, like what we do every day, it is likely to take a very long time.
Janet, thank you so much. Janet Moy there from Brewin Dolphin stays with us, and we'll talk about other asset classes, including stocks and bonds and the things that have been around for a long time. Coming up, open to talking about tapering at some point. Well, Fed minutes give the markets plenty to think about, but stocks have no direction. More on that next, and this is Bloomberg.
right now about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
It was a surprise to hear the talk about Fed tapering. I think that that is something that is a debate that won't play out over 1 month, but the market had been thinking there might be a couple of months before you really saw this particular issue come into focus.
From a Fed's perspective, keeping the emergency measures in terms of the policy, I think, will be less warranted as the growth comes back. And hence the point that they are thinking about talking about tapering. It's not tapering as yet. I think will come to the front. I don't expect that to be a June FOMC outcome, but something that will happen between July to September.
We're going to continue to see this debate around inflation. You're going to get volatility throughout the summer, and we're going to be guessing about the Fed minutes and the specific meaning of those words for the next several months.
Well, some reaction there from the Fed minutes and the possibility of tapering to come. Now, still with us, Janet Moy from Bruin Dolphin. Janet, so it was the first time that they were thinking about tapering. The markets aren't really moving on the back of it because there are nuances like who voted for that, and it could be people that we were expecting. But what's your take on inflation right now? Is there a danger that the market will be surprised and that actually tapering will happen sooner than they expect?
First of all, on inflation, we think that digesting the latest US CPI figure, there is a lot of components that is driving that, and that is transitory in nature, in our opinion. For example, you see that the categories related to the reopening of the economy, like the transport prices, like the hotel prices, and there are also categories related to the supply shortages to semiconductors, such as used car sales. They are the biggest drivers of that month-on-month increase in the core CPI. So it does suggest to us that there are transitory factors in that inflation report. And as such, we believe that the high inflation print will probably peak in May, and then it will gradually moderate towards 3% by the end of the year and towards 2% by the end of 2022. So again, transitory is a vague concept. We don't know whether the Fed means 3, 6 months, or a year. So, but to us, we think that we are going to see peak inflation in the very near term, and we think that markets they have actually digested a lot of that inflation concern news, and I think they're more and more thinking about the Fed should actually think about the tapering in the coming future. I think the biggest risk out there is that the Fed let the economy run too hot, and they ignore that aspect, and they keep policy very, very accommodative, continue to buy 120 billion of bonds per month. And that is a scary bit that inflation could turn actually more persistent than thought. So I think the fact that the Fed is thinking about talking about it in the coming months or in the future is actually a good thing for markets.
Janet, I mean, it kind of reminds me, we were thinking about getting a puppy, and it didn't come for a long time, and then suddenly it was there. But that's another matter. Janet, when you look at, commodities, which is one of the asset classes or one of the industries that we've been looking at very closely, I mean, are we underestimating or overestimating actually the power and growth in China?
Yeah, so I think the growth in China is very robust still. Well, consensus expectation is that it is going to grow at 8% this year. I think it's more the change in tone of the monetary policy that is in focus. Well, what we already saw in the data from the credit side of things that China is trying to slow down the pace of credit and as such, the pace of the economic activity. So as a result, I think a number of commodity prices, industrial commodity prices have actually retreated from their peak in recent weeks because they are starting to worry about what China may do about it. Because after all, China is the biggest commodity importer, especially on industrial commodities. So historically speaking, whenever you start to see a tightening in the Chinese credit impulse, then commodity prices should roll over. And I think we may be at that point in time where we see peak commodity prices as well.
Janet, thank you so much for all of your insight. Janet Moy, their investment director at Bruin Dolphin, joining us today. Now, coming up, Elon Musk reveals that he has Asperger's syndrome, but there's more mounting evidence of a lack of progress in tackling disability representation at multinational firms. We'll discuss that next with an important report out here in the UK. And then, of course, it's all about cryptocurrency. If you look at the day we will have, we do have a bit of data out of the US that may give us an indication, again, what the Fed is looking at. I'm also looking at oil. Now, oil is a story of two halves. One, of course, is the growth in China. The other one is in the Iran talks, the fact that they're in focus and that we could have some kind of deal. Treasury is pretty much steady, the dollar weakening. Again, cryptocurrencies, after a crazy week, or a crazy day yesterday, now stabilizing after this pretty volatile session. Yesterday, it rallied 30%. It was down 30%, so we'll look at new currencies as well. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Expect clear, concise conversation on Bloomberg Surveillance.
There's no vowels in a digital future.
Come on, John, I just think it works.
It works for Umberta's.
We've beaten this to death.
Watch weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
A recipe for disaster. Cryptocurrencies remain under pressure after Elon Musk and the PBOC tank the entire asset class. After a swathe of dip buying, is there more room to fall? Open to taper, Fed minutes show a willingness from the U.S. central bank to discuss scaling back purchases in coming months. U.S. futures point to narrow losses at the open. And brokering a ceasefire reports suggest that Israel and Hamas may reach an agreement to cease hostilities tomorrow after heavy pressure from President Joe Biden. Well, good morning, everyone. I'm Francine Lacqua here in London, and welcome to Bloomberg Surveillance, the early edition on this Thursday, the 20th of May. Now let's get straight to our top stories. And minutes from the Fed's last meeting showed that some officials were hinting at tapering to come. The minutes described an openness in upcoming meetings to begin discussing a plan on scaling back bond purchases. Well, let's get straight to our top market stories with our Danny Berger. Danny, what are you seeing?
Well, Francine, look, that sort of statement from the Fed, at least yesterday, was enough to nudge U.S. 10-year yields higher. It was a surprising statement to a lot of market observers because, they're not supposed to be thinking about tapering. But one of the really key elements, and I think it's kind of fading into today's trading session, is one, this of course came before those April jobs numbers, so does that change anything? And two, we don't know exactly who said this, which are the officials who think that this could be a topic of debate at upcoming sessions. So let's switch up the boards, look at what's happening so far this morning, and we are seeing somewhat steady yields. We're not getting more of those rising yields. In fact, it's lower by about 1 basis point when it comes to the 10-year yields. But key here is that U.S. break-evens are below that 2.5% level. That from the Fed was really enough and is still enough this morning to put some of those inflationary bets lower, to see less inflation for the next 10 years. Now, when it comes to equity markets, I mean, maybe bond markets were playing along, concentrating on what the Fed was saying, but equities seem to kind of be enthralled by what's going on in Bitcoin. I mean, there are a lot of people yesterday who were saying, okay, people are going to be pulling their money out of Bitcoin and putting that to work in the equity market. So I think that distraction, maybe to some degree, is still going on today because we're seeing Bitcoin rebound. So that's about 3.6% higher. It's still below 40,000 though, Fran. It's been waffling around that key target so far this morning. But let's look at the U.S. pre-market movers, because when it comes to the U.S. session, when it opens in a few hours, it's going to be those crypto stocks we have to watch, be it Marathon, be it Riot. So those are up nearly 2%. But look at Coinbase. Coinbase isn't even up 1%, despite the fact that we are seeing the whole entirety crypto space move higher. I think this is probably a nervous thing to look at if you are an investor in Coinbase, that it can't successfully rally with the rest of them. Francine, Coinbase, of course, yesterday having some of those outage issues when there was all the hype and trading around Bitcoin.
Danny, thank you so much. We'll definitely be watching crypto stocks very closely. And in the meantime, we'll be talking about cryptocurrencies a lot. Now, it was 2 weeks ago that Elon Musk revealed that he has Asperger's syndrome while appearing on U.S. national TV. It is thought to be the first time that the Tesla chief executive has spoken openly about his being on the autism spectrum. Now, people with Asperger's often focus obsessively on a complex topic and have trouble with social relationships. The very fact that Musk's revelation may be considered groundbreaking in the business world could also mean that disability still remains a difficult topic in a corporate culture. Now, the Valuable 500 is a global disability network that consists of business leaders from 500 of the world's biggest companies, which have agreed to publish quarterly reports into disability representation. It launched at Davos in 2019, and it represents firms with a total annual revenues of more than $8 trillion across 36 countries. Its objective to tackle the, quote, shocking state of disability representation in business. Well, joining us now is Caroline Casey, the founder of the Valuable 500. Caroline, thank you so much for joining us. I actually remember that interview in Davos 2 years ago when you launched it. You've had immense progress. What has been, though, the most frustrating thing about this? We're coming from a very low base. How much progress have we actually done during the pandemic?
Well, I think the pandemic, well, first of all, thank you for having me back. It's wonderful to be here and having announced this critical, it's the biggest business move on disability inclusion ever. Look, the pandemic, I think, has exploded or really shown us the gross inequity and inequality in our world. But one thing it also has done, it has shown us that a business system can flex and it can change when the intention is there. And what we have seen is, for a lot of reasons before the pandemic, there were so many reasons that disability was excluded because for people to maybe get into work, it was too hard or it was too costly. And the whole world has worked remotely. And I think this is the greatest opportunity we have right now. And when we're looking at growing out of this and looking at our recovery, if you think about the spending power of the global disability market, which, because we have 1.3 billion people with a mother and a father, that's 70% of our global economy, that is 13 trillion. So I think this pandemic has given us two things. It shows us the system can flex and change if it wants to, and it shows that there is a huge need for us to be engaging with this consumer base as we have inclusive growth. And at the moment, you said it yourself, we have 500 of the world's biggest companies. And what makes this so exciting for us, this was not a pledge or a tick box exercise. What we're doing is we're announcing phase 2. Phase 2 to activate this community, to improve the state of disability inclusion in business. We've 13 global iconic leader companies. And let me just give you the scale of this, right? We're talking about companies like Sony and Mahindra and Google and Apple and Deloitte and EY. This is big companies committing, their CEOs and their businesses committing to really exploring how do we serve our consumers with disability? How do we report on disability? Do we even know how many people with disabilities are working in our businesses? Do we, as the leaders of our business, speak about this? And that's why Elon Musk speaking was so important.
Yeah, I was going to ask you, first of all, do we have the numbers of how many employees have disabilities at these big companies? And do you actually need to put some kind of targets to make sure that it goes quickly enough instead of it just being, you can have the best goodwill in the world, but then if this wanes, then it will be only a tick box exercise.
Absolutely. Listen, we have to look at how we report on disability performance internally in our companies. And also, can I say, we need to have disability metrics in business performance tools, because if we don't measure things, it doesn't get done. Now, we commissioned a piece of research with Tortoise, and there's some shocking stats here, that we have in our FTSE 100 companies, we do not have any leader or senior executive or board member who discloses having a disability. And that's why Elon Musk's story is such a big deal. I have a disability I didn't disclose. I understand why we don't. But if we don't see it, we can't be it. The second one is only 12% of our FTSE 100 companies are reporting on disability representation. Now, we estimate, and we know most likely, that our companies have anything between 15 to 18% of their employee base have a lived experience of disability. 80% of disability is invisible. But the legislation protects people like me not to disclose. But I'm challenging us going, well, why are we creating cultures where people should have to hide? Why do we know that 7% of our C-suite have a lived experience of disability, but 4 out of 5 of them are not disclosing it, like Elon Musk just did, or Richard Branson just did? Because if the leader is willing to disclose it, then individuals will, and then we can serve people with disabilities, and we can ensure they get jobs that are meaningful, and they can be retained and have careers within companies. So if we're not talking about it, if we're not reporting about it, and it's not enough to say, well, this is too difficult. And that's why I think the Valuable 500 is so important. We've got to hack solutions together. We've got to find a way to solve this problem, not just navel gaze the problem.
So, Caroline, so when you speak to chief executives, and maybe the chief executives that actually have signed up to this, what do they say is their biggest barrier? Is it actually, if they employ someone, that then they make sure that the environment is safe and that they progress, or is it actually hiring people with disabilities, or is it measuring?
There's two things that I would say. Still the fear of not doing enough. Still the fear of getting it wrong. Hence the importance of us having this collective community where we can share best practice and innovate together. It genuinely is fear still. But the second one that I think is, I genuinely do not believe business understands the extraordinary return on investment and the need to future-proof your business. Disability is going to touch every one of our lives. And if you look at how this pandemic touched us, we know that's to be true. Can I just say, isn't it extraordinary? This shows how little we understand. 1 in 3 of our FTSE 100 companies' websites are not accessible. Today is Global Accessibility Awareness Day. How on earth are you going to be able to access, in the UK alone, that 13 million people with disabilities representing 249 billion in revenue if your website's not accessible? We do business online. So that's, I believe, chief executives still are only learning about the extraordinary business opportunity, insight, and innovation we have to offer.
Caroline, I mean, you use the word, the label, actually disability. Do we need to get away with that, or does it not really make a difference? I know, for example, for autism, they use the word neurodiversity. Does it actually make a difference for companies? Does it make a difference for you?
Well, I tell you what, the word disability is a little word that covers so much. And I have to say it's the intention behind the word. There's a sense of real hope when you see that younger generation talking about disability pride. It's the intention behind it. We are not defined by our disability. I have a disability. It's part of who I am. And it does not define how I exist and live in the world. So I really believe we need to get on with looking at the skills and capabilities and the opportunities that people have, every one of us, and the innovation and insight we bring. And the language, yes, needs to be discussed, but it's intention behind it. You cannot whitewash this language. I have a disability, I'm proud of it. And like Elon Musk would say, it's his superpower. Look how he got to where he got to.
Caroline, thank you so much for a wonderful conversation on an important topic. Caroline Casey, they're the founder of the Valuable 500. Now, coming up, reports suggest that Israel and Hamas are moving closer towards a possible ceasefire in coming days after pressure from the U.S. We'll get more on that shortly. This is Bloomberg.
Markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. EasyJet is expecting a summer of gradually recovering demand for travel and now sees only about 15% of its pre-virus capacity in the current quarter. It previously expected 20%. For the first 3 months of the year, the discount carrier reported a loss of £700 million.
There's still very limited visibility beyond, the Q3 that we are in. We only expect to fly around 15%, as an example, of 2019 capacity in Q3. But the trend is definitely there, and we know that there's a huge pent-up demand for people to travel. So it's all now down to the restrictions being unwinded.
Now, Chinese tech giant Tencent is reporting a 25% gain in quarterly revenue. China's largest firm has sustained a boom in gaming and the cloud that began during the pandemic. Process, the unit of Naspers, which owns around 30% of Tencent, is higher this morning. Vegan food and drink maker Oatly Group has priced its IPO at the top of a marketed range, raising more than $1.4 billion. The offering underscores plant-based products jump into the mainstream as consumers do seek alternatives to traditional meat and dairy products. The listing gives Swedish Oatly a market value of about $10 billion. In the past few minutes, we have heard that the organisers of the Shangri-La Dialogue have cancelled the event in Singapore due to a rise in virus cases. US Secretary of Defence Lord Austin was expected to be among those attending the event, which focuses on global defence and security issues. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, there are reports that Israel and Hamas are nearing a possible ceasefire. The New York Times says the fighting could stop within 2 days. The Wall Street Journal says potentially tomorrow. It comes amid increasing pressure from the U.S. to de-escalate the conflict. So far, 219 Palestinians and 12 Israelis have died. Well, joining us to discuss all of this is our International Government Executive Editor, Roz Matheson. Roz, always important and great to speak to you on this topic. How realistic, first of all, is it, is Biden's path to a ceasefire?
Well, it does seem we are certainly heading that way. There's been chatter about this for a number of days now, even before the last phone call yesterday between the US president and the Israeli prime minister. And that's, of course, despite the continued violence that we're seeing today, Israeli airstrikes hitting homes and weapons warehouses and so on in the Gaza Strip. And also there were some rocket attacks that have come from the Gaza side. It seems to be moving very much towards the idea of getting a ceasefire that would be mediated largely by the Egyptians, who can talk, of course, with Hamas, because the US will not, because they are designated a terrorist outfit. It seems that perhaps what we're seeing is that last kind of effort to achieve their desired results, particularly for the Israeli Prime Minister, who has said he wants to degrade Hamas, and he needs to also to be seen to be doing this on his own terms. So we are headed in the right direction, it seems. He'll say perhaps tomorrow that he's achieved what he set out to do with the Israeli airstrikes, and he's now ready to de-escalate. So the noises on that front, at least today, remain positive.
And Roz, this is what you were saying yesterday, and you just repeated. I mean, basically, the U.S. is relying a lot on regional powers to stop the conflict. Is there any insight, I know this is a difficult question, that once we have a ceasefire that can actually hold?
Well, that is the big question. It may be actually simpler to get a ceasefire that holds rather than dealing, obviously, with the very deep-seated fundamental issues behind some of this, and particularly the communal violence that we've seen. We saw that flare again yesterday and extended to different areas, of course, where you see Arab and Jewish people living in close proximity. So the ceasefire itself might be the simple part, it turns out, because you can get Hamas and the Israeli military to agree to stop firing at each other. The bigger question is, how do you diffuse things on the ground in Israel? How do you get people to go back to their homes and stop the violence that we've seen on the streets? And if that violence does pick up again, then there's fresh pressure on the Israeli Prime Minister to resume his airstrikes on Gaza. So it's sort of a vicious circle there, but we need to see the first step being the ceasefire and the second step being a way to de-escalate on the ground.
Yeah, Roz, thank you so much. Always insightful. Bloomberg's International Government Executive Editor there, Roz Matheson. Now, coming up, the crypto yo-yo. Well, Bitcoin loses 31% of its value in the morning before surging 33% in the afternoon. That was yesterday. So what's next for the virtual currency? The discussion is up shortly. This is Bloomberg.
our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We go through soul-searching times like this.
This is, an asset with very weak fundamentals that is going to be subject to a lot of volatility.
I mean, imagine roads with no speed limits, right? I mean, nobody knows if you should drive fast or slow, and so it's super dangerous. And then you have a speed limit, and everybody knows what the rules are, and they can then adjust their behavior. We need that in crypto.
The crypto space is one that's very exciting and interesting to watch. There's a lot of volatility in it. But right now, it's not at a scale, and it doesn't have a reach into the economy that has systemic implications for us.
Our conviction is as high. The one thing that has changed here, however, is the environmental concerns around Bitcoin in particular have caused people like Elon Musk to pull away and say, whoa, 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 let me make sure I understand this. And we believe that even this is going to change.
Some of the reactions there to yesterday's crypto roller coaster ride. Now, crypto assets saw a whipsaw session yesterday, plunging by a third, then jumping higher by about the same amount. Bitcoin and Ether have seen some of the biggest losses this week after a stream of negative news. Now, joining us is Bloomberg opinion columnist Marcus Ashworth. Marcus, I want to ask you about the Fed. I want to ask you about tapering, but I need to start with crypto. What exactly is going on?
Well, I think it was just the crisis of confidence that you have when you have such a small float, in effect, that there is, it's held by, we believe, and no one knows anything in this world, and that's what creates the mystery and both the fun and the misery, is that there are some very large holders of crypto, and it's not a liquid market. Even the futures market isn't really, practical for shorting because the margin requirements are so high. So it becomes this swell of a shoal of fish, which it's hard to predict. And I think that, weirdly, though, I'm looking at myself and maybe I'm the fool, because, we're all starting to really quite enjoy it yesterday when I saw all my chums in the market and everyone else, sort of reveling in this downfall of Bitcoin at last. Sanity has returned. And then, well, it hasn't. Sanity is not returned. The madhouse is still very much alive, and it lives to fight another day. So it's part of its shtick, I suppose, and that's what's we've got to see more of this, unfortunately.
Yeah. So, what exactly, Marcus? When you look at some of the things that what is it correlated to? So, what surprised me is that PBOC says, look, we won't accept, or China won't accept it as a cryptocurrency payment, but we kind of knew that. So, it doesn't really track inflation. Like, what does it track?
Zero, nothing. Human emotion. It's got no value in the world. It doesn't do anything. It's not practical. It is a bottle to put human emotions in and shake it up and down, and it's hugely exploitable, and we all fall for it. And unfortunately, we keep on giving it oxygen. So it's one of these sorts of things that we're a victim of our own creation here. And look, it's at some point somewhere there might be something that comes out of this, but the practical reality is, my chum Bill Blaine points out this morning, quantum computing at some point will be able to break and crack the codes of Bitcoin, and it will unravel of its own nature. But that's a while away still, and we're ruining the planet while we're trying to create it. But and everyone's having lots of fun and games with silly tweets and silly coins. But it's keeps us alive. It is directly a consequence of too much money. Infinite money for finite assets, and people can create new and weird and wonderful things. So it's unregulated because it's a currency, it's not a security. And look, you play it at your own risk and have some fun. But grumpy old man, it's not for me.
All right, what does a grumpy old man tell me about what the Fed will do in terms of tapering?
Well, the grumpy old man is thinking, what is this stupid not talking about, getting ready to start talking about, maybe talking about tapering? Look, in a normal world, which clearly we're not in, the Fed would be tapering already, you know, roll down the track of it, but it had such a bad experience in 2013. But the Bank of Canada has tapered and got away with it. The Bank of England is sort of quite have maybe tapered, but, you know, it's just extended, you know, over a same time frame, the same amount of bonds it's going to buy, but, you know, it's reduced the pace. So why is the Fed so frightened of itself, of its own shadow? You know, I think they just want to overdo it deliberately and get the markets, you know, to very much get the U6, which is the underemployment rate, and the labour participation rate better, and then maybe they'll start tapering, and then at some point in the next century they may even raise rates.
Thank you so much, Marcus Ashworth there, Never Dull. Bloomberg Surveillance Early Edition continues. This is Bloomberg.
closures and the complexities of COVID, it became apparent that if we could provide this course in South Australia, it would benefit trainees of anaesthesia in the state.
Feel like I've got some excellent skills to take away from the course, and I'm very grateful that it could be run in Adelaide.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
The crypto space is one that's very exciting and interesting to watch. There's a lot of volatility in it. But right now, it's not at a scale, and it doesn't have a reach into the economy that has systemic implications for us.
They write about crypto because it's new, and they assume that the status quo is kind of the risk-free zone. It really isn't.
We go through soul-searching times like this and scrape the models, and yes, our conviction is as high.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Well, good morning, everyone from London, Berlin, and New York. Our top stories today. Crypto craziness, a plunge in the morning, a rally in the afternoon. We'll look at what's likely to happen next for digital coins. Time for Taper Talk. Well, Fed officials signal they're willing to discuss scaling back their massive bond purchases. And the Semiconductor Summit, the White House looks for solutions to the chip shortage that has rocked supply chains around the world. There's quite a lot going on. I know we're really looking at cryptocurrency after the crazy day that we had yesterday. I've never really seen anything like it. And then, of course, Kaylee, when you look at everything else that's in the markets, it's the chip shortage and exactly what we heard from the Fed.
Yeah, I feel like nothing characterizes yesterday better than the fact that Bitcoin got more attention than the Fed finally talking about tapering. It was a really wild session. Today, maybe as well. I guess we're going to have to stay tuned. Right now, 5 a.m. Eastern time, 4.5 hours to go until the U.S. Open. We'll see how the tone is because it was a bit mixed in Asia. You did have Chinese stocks ending the day higher, Japanese stocks as well. A little underperformance from Taiwan stocks. And broadly, the materials sector in Asia is what underperformed. The MSCI Asia Pacific Materials Index was down a little more than 1%. And that had a lot to do with the fact that China is still trying to cool down the commodity rally. And indeed, we saw iron futures in Singapore down about 2.2%. As for what the picture looks like here in the U.S., yesterday we did see some dip buying coming in. Originally, losses were quite large. Even the NASDAQ 100 managed to end the day in positive territory. The other benchmarks down just fractionally. But today, in really just the last couple of minutes, we have seen futures rolling over. They were already down just fractionally, but now we're down about 20 points on S&P E-minis, or about 0.5%. In the bond market, of course, investors are trying to figure out what exactly the Fed is going to mean when that taper discussion is going to start, as some members of the FOMC are alluding to, or were alluding to in those minutes. Yields moved a lot higher on that yesterday. Today, they were coming in just about 2 basis points on the 10-year to 1.65%. It is a weaker dollar story this morning, though it is off of its lows. And then, of course, the whiplash continues for Bitcoin, all the way down to $30,000 at one point in yesterday's session, then back up to around $38,000 by yesterday's close. And we're just shy of $40,000 once again. So there is a rebound taking shape, Matt. My question is, how long does it last?
Yeah, or what caused this incredible drop and then recovery, Kaylee? A little bit later, I'm going to show everybody a chart that may explain some of it. I will walk our radio listeners through the chart. Welcome to those tuned in on London DAB Digital Radio. Right now, I want to take a look at what's going on in European equity indexes. We had gains early on that have now dissipated to some extent. Spain is currently down. France and Germany are gaining. The UK and Portugal not doing a heck of a lot of anything, neither really is Italy. So a little bit of a mixed picture, let's say, here. I think the interesting thing really is the Fed beginning to talk about tapering. That's brought the dollar down against most other currencies, including the euro. Right now, holding right around 122, just under 122. And then there's a couple of smaller stocks, but really fascinating company stories. A newspaper is reporting that ST and Microelectronics might be evaluating a possible takeover offer for Nordic Semiconductor. As a result, those shares are jumping. If there were a percentage sign there, you would probably see about 8%. And then Trainline is getting clobbered. The UK has the oldest train network railway system in the world, and they're thinking about revamping the way ticket prices are put together, the way tickets are sold. Trainline is an online ticketing company in the UK worth about $2 billion, a little bit more, but investors are worried they could be crushed by these new changes, and as a result, the shares are off more than 25%, Francine.
I didn't even know that, Matt, that actually we had the oldest train
Pretty
lines.
fascinating,
I thought it was the
right?
most expensive. Yeah, I thought it was the most expensive, but I know we also have a good run for our money because of the U.S. trains. We should dig a little deeper into what the most expensive train line across the world is. Now, look at what is ahead today. U.S. Commerce Secretary Gina Raimondo holds a summit to discuss the global semiconductor shortage. We'll, of course, be all over that because it touches all industries and all business. The IMF Managing Director, Kristalina Georgieva, and the ECB President, Christine Lagarde, speak at the Vienna Economic Forum, and then 8:30 a.m. New York time, we'll get the U.S. initial jobless claims. And of course, this could give us a good indication of when the Fed could start thinking about tapering. I love that, Matt. It's kind of like the Lacqua household. We talk and we think, but then it happens.
Well, I mean, I think it's really the most fascinating thing for the broader markets that we had happen yesterday. Of course, we were all obsessed with the crypto moves, but that doesn't really affect as much or as many assets as the Fed talking about tapering. And as a result, I think we're going to see a lot of focus on this over the next days and weeks.
Yeah, because the volatility in crypto assets today a little bit more subdued after that bruising day that left much of the crypto community in shock. Now, key analysts for Bitcoin's roller coaster ride, Elon Musk's complaints about Bitcoin fossil fuel usage, and the PBOC's warning that digital tokens cannot be used for payments. Let's get more from Bloomberg's Danny Berger. Danny, I mean, it doesn't really track anything, right? So it got sold off. It was a crazy day. It got sold off. But then actually Bitcoin lovers went back in and bought some.
Yeah, it's always kind of confusing to me to assign various price targets to Bitcoin because, okay, I guess you can say if a certain amount of people own it, or maybe here's the capacity thing. But I always personally have a hard time wrapping my head around it because, look, there are no fundamentals on this thing. But if you're dealing with this deep sell-off, this was the day, yesterday was the day that for the Bitcoin fans, you prove that you're in it for the long run, that you are hodling, that you are not selling off your Bitcoin. And look, we are still seeing, you know, those levels below 40,000 more or less being sustained today, but some of those losses are easing. Now, what could cause that? Would cause the sell-off? I mean, there are probably a variety of factors. It does seem like retail was participating in this because there wasn't a lot of contagion. Of course, there are a lot of leverage players who might have got stopped out too, but we have kind of, you know, the three horsemen of Bitcoin coming out yesterday and saying we're still buying, be it BitTorrence's Justin Sun talking about buying Bitcoin and Ether, Kathy Woods talking to us, seeing it at 500,000. And of course, there's always an Elon Musk tweet saying that Tesla has diamond hands. Now, as to what comes next, of course, everyone's talking about that big psychological $40,000 level. We're flirting with that. And regulatory concern, I keep hearing this now from a lot of the institutional players, both the ones that like Bitcoin and the ones that dislike Bitcoin. So I think that that's going to continue to be a key focus for the cryptocurrency, Matt.
I would point out also Michael Saylor, so maybe it's the four horse people of Bitcoin, right? Because he said that his companies have bought 111,000 Bitcoins and not sold one single Satoshi. And I would also point out that a lot of people who are pro-crypto are also anti-regulation. For some people, that's kind of the point. Some people like the libertarian avoidance of regulation. The DeFi aspect of it is still pretty strong. So, Danny, great report there on what's going on. Of course, we're going to continue to follow crypto. But right now, I want to take a look at some of the stocks moving in pre-market trading in the U.S. For that, we go back over to Kaylee in New York. Kaylee?
Well, Matt, I want to talk about a number of stocks that are moving to the downside, one of them being Cisco Systems. It reported earnings after the bell yesterday, and it wasn't so good. The stock is down about 6% in pre-market trading. Now, the revenue forecast was a beat. It's the profitability forecast that missed expectations. The company saying it's facing higher component costs, and that's a problem. Another stock moving lower in pre-market trading is AMC. A lot of those meme stocks that had seen a bit of a resurgence got caught up in that risk-off tone yesterday. AMC fell 10%, snapping an 8-day winning streak. And once again, it's lower by the better part of 3% in early hours. And I would just point out to you that Delta Airlines is moving lower. We're seeing a number of travel stocks under some pressure with about 4.5 hours to go until the opening bell. That stock down about 2% in pre-market trading, Francine.
Kaylee, a lot going on. We'll look at, of course, travel stocks. We'll look at cryptocurrencies. We'll also talk about the Fed. Coming up, cryptos staying under pressure after yesterday's plunge. We'll discuss more on that next. And then a little bit later, we're looking forward to speaking to Michael Stroback. He's the Credit Suisse Global Chief Investment Officer. I wonder whether he's invested in crypto as well. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between governments and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We go through soul-searching times like this.
This is, an asset with very weak fundamentals that is going to be subject to a lot of volatility.
I mean, imagine roads with no speed limits, right? I mean, nobody knows if you should drive fast or slow, and so it's super dangerous. And then you have a speed limit, and everybody knows what the rules are, and they can then adjust their behavior. We need that in crypto.
The crypto space is one that's very exciting and interesting to watch. There's a lot of volatility in it. But right now, it's not at a scale, and it doesn't have a reach into the economy that has systemic implications for us.
Our conviction is as high. The one thing that has changed here, however, is the environmental concerns around Bitcoin in particular have caused people like Elon Musk to pull away and say, whoa, 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 let me make sure I understand this. And we believe that even this is going to change.
And those were just some of the reactions to yesterday's crypto roller coaster ride. I want to point out before moving on that we have roads with no speed limits here in Germany, and they are not that dangerous. In fact, they're really exhilarating because people are trained how to drive before they're given driver's licenses, and then we avoid issues. I promised earlier a chart showing kind of what happened, part of what happened with Bitcoin yesterday. And Kathy Wood alluded to it there in her interview with Carol Massar. For those of you listening on Bloomberg Radio, I'll just wrap it up for you by saying, in February, we were trading at $40,000 for a Bitcoin, and Elon Musk announced that Tesla would be accepting the currency for its cars and owned $1.5 billion worth of the crypto on its company books. Then what happened was just now at the middle of May, Elon Musk said, hang on a second, we won't take Bitcoin for Tesla purchases because we've realized all of a sudden, I don't know how he hadn't noticed before, that maybe it's not great for the environment. And as a result, we're now right back where we started when Elon started talking about Bitcoin in a big way. So this is pretty much Elon Musk's involvement here. And if you lop it off, then you're right in the same place that you were before. Let's bring in Bloomberg Intelligence commodity strategist Mike McGlone to talk a little bit about this. Mike, you have probably looked at this more than anybody else at BI. You've really been studying crypto for years now. And you were a trader in the open outcry pits in Chicago. I wonder if you noticed some parallels between the plain vanilla commodities that you traded and the Bitcoin or the crypto commodities that we're watching now?
Oh, yes, Matt. Well, one thing you remember from being in the trading pits is being on a sell side and being covering customers. You just thrive on volatility. You got to get it right, but you thrive on volatility. And days like yesterday and what we've had recently are just where you have opportunities. You just flush out all the leverage longs. You print down to good levels, like you pointed out. And usually that builds the base for that fundamentally sound bull market, which is what we're seeing right now. So I look over what I see, okay, fundamentals are quite strong, most notably for Bitcoin. Then I look at the Bloomberg Galaxy Crypto Index. It's still up 130% on the year. Yes, it got a little expensive, up 250% on the year, so markets went up too far. They've come back to good support, but fundamentally sound. And I'll leave you on this. What yesterday proved is how significant Bitcoin is. It dropped. Copper dropped 4%. Every asset on the planet dropped. And look, stocks are still down. So to me, that's the key indication here. Bitcoin's in the mainstream, whether they like it or not. The world's going digital, and this is a global digital reserve asset. And I think this is going to just bring out more of the buyers. But you know what? Probably stuck in a range between 30 and 60 for a long time.
But Mike, what's driving it? This is my, I can't really understand or grapple with, it's not really tracking inflation. It's not like, is it just because people like it that they buy it? Or do we, are there any fundamentals tied to any cryptos?
Oh, well, typically fundamentals. So we can start with Bitcoin. Declining supply, increasing demand, replacing gold. The world's going digital. Do you want to take that risk that your gold holdings might be replaced by Bitcoin? So it's a classic example of human nature. You have to allocate some to Bitcoin. So I think we're seeing that, and you're definitely seeing that with flows out of gold and into Bitcoin. Now, gold reached good support. It's probably going to continue to appreciate. And then you have the rest of the space. There's Ethereum. Ethereum represents digitalization of finance, fintech. It's the platform for all the other cryptos. For instance, the most widely traded crypto on the planet, Tether. It's a digital dollar. Dollar dominance is increasing. That's an Ethereum token.
I mean, Mike, you've got to count the fact that an S&P 500 company was dedicating part of its balance sheet to Bitcoin. I mean, if that's not fundamental, the chart I just showed you, I don't know what is.
And they're based in dollars. Tesla's based in dollars. So what about the rest of the world that doesn't have this base reserve currency? Allocating to the reserve asset, that makes sense. And I like that chart you showed, Matt, because it shows Bitcoin's between 30 and 40,000. Before Tesla, it got way too expensive. It's about 60. Now it's back at that base. What does that mean? It's a bull market. The trend's still higher.
Right, but Mike, I mean, Elon Musk then turns around and says, "Guys, it's not green enough," and we all knew it, and it falls off a cliff. Is there something that will replace it that is more green?
Well, there is. That's one thing that's happening in Ethereum. Ethereum is switching to what's called proof of stake, which is more green, and it's also, but it's not going to be a digital reserve asset like Bitcoin. So that's coming into space. But one thing that Elon Musk didn't point out is it's the harnessing of energy that humankind has really done to advance. And that's what is the strength of Bitcoin. It uses a lot of energy. It's that source of energy that matters. And all that energy is really going renewable, because the thing about Bitcoin is it's really favorable to that intermittent source of energy you get from renewables, i.e. solar, and actually very remote sources of energy like hydro.
Mike, I was talking to Matt Hogan, he's CIO of Bitwise Asset Management yesterday, and he said yesterday's price action was actually proof that institutional investors are involved and that it was retail panic selling and institutions buying the dip. Do you agree with that?
Oh, absolutely. There's nothing like people getting stopped out of their leverage longs, and to me, that's what happened. And being an ex-speculator, an ex-trader, I have very little sympathy for speculators. Thank you. But they also provide the liquidity. And the key thing to note is right before we had that flush, 60-day volatility in Bitcoin reached a new low for the year. And I think that's what's going to happen. It's going to continue to go down as the market stabilizes, becomes more mature, realize we're probably building a good base of support. We probably put a good resistance, and we'll just kind of knock around an inch higher. I think that's what's going to happen in Bitcoin. Then there's the rest of the space. Ethereum got a little bit too expensive, around 5,000, but it's getting kind of good support around 2,000.
Mike, quickly, you're of course a commodity strategist. I want to talk about another commodity, oil. The president of Iran says a broad outline has been reached to end oil sanctions, and we are seeing Brent right around session lows, down about 1.5%. What is the real implication of that for the market?
Oil has probably peaked for the year around 70. It's been going down since 2008. It's a classic bear market. It got near the upper end of the range. And what about COVID made oil bullish? Yes, prices got negative, but now we're up the upper end of the range. The world has changed, and Iran is just one example of this massive supply in the space, more and more supply. And one thing about the supply, it's on the back of rapidly advancing technology. The rest of the world is following the U.S. Total consumption of U.S. liquid fuels is the same as it was 20 years ago, and that's before EVs. Now, EVs are kicking in. We can produce oil easily. We can replace it with technology, and it's just a matter of time. But then the opposite side of that is copper. Copper's probably bottoming around 10,000, and resource nationalism picking in. So what I see for the future of the commodities, forget the super cycle. It's happening in Bitcoin. Metals pretend to go higher. Petroleum replaced by technology. Expect petroleum prices to inch lower.
Mike, thanks so much. We have to leave it there, but actually we would speak to you for another 3 hours. Our Bloomberg Intelligence commodity strategist, Mike McGlone, joining us. Now, coming up, it's the fourth day of the Bloomberg Business Week Summit. Today, we'll hear from the U.S. Infectious Diseases Chief, Anthony Fauci, and EU Commissioner Paolo Gentiloni. Part of that interview a little bit later this hour as well. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kelly Lyons in New York. Now let's get straight to the Bloomberg. First for news, and there are media reports that Israel and Hamas are near a possible ceasefire deal. That's after President Biden urged Israeli Prime Minister Benjamin Netanyahu to wind down the conflict. Now, according to the New York Times, a deal would unfold in stages. Israel would quit attacking the Hamas infrastructure, while the Palestinian militants would halt rocket attacks. Now, the Democratic-controlled House has voted to create a commission to investigate the January 6th insurrection at the Capitol. 35 Republicans broke ranks with their leadership to support the probe, but the legislation's fate in the Senate is uncertain. The Republican leader, Mitch McConnell, is opposed. Democrats would need 10 Republican senators to vote in favor of the investigation. China has released the first images from its Mars probe. Well, the spacecraft landed on the red planet Saturday. It's carrying a rover which will explore the surface near the landing site. China is the second country after the U.S. to send a rover to Mars. And shares of Oatly begin trading today. The Swedish vegan food and drink maker raised more than $1.4 billion in an IPO. Shares were sold at the top of a marketed range. The listing gives Oatly a market value of about $10 billion. I have to say, there's always a carton lying around at home, not mine, but I couldn't believe it when it was worth $10 billion. It's quite extraordinary, and I guess that's the way things are going in terms of consumer taste.
What is that? That's oat milk?
Yep.
That people drink instead of cow milk? I guess it's for people who are lactose intolerant?
The healthier option, apparently. I think it's just a trend towards vitamins and you know, being better.
Yeah. The question is this going to be like another Beyond Meat? I guess we'll find out.
I mean, I've tried almond milk. It's pretty good, but I'm not sure. Well, I guess oat milk sounds like it would be good. I'll try it.
Try it. We'll speak later to the Oatly chief executive, Tori Pedersen. That's at 11:30 a.m. in New York, 4:30 p.m. in London.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, there's quite a lot going on in the markets, Matt. We spend about 60% of our time looking at cryptocurrencies and the rest, I guess, thinking about what the Fed is thinking about tapering.
Yeah, I actually had some people complaining on Twitter that we were too focused on cryptos yesterday. And the thing is, you know, when you have an asset that is all of a sudden worth $1.2 trillion and then it loses in a 24-hour session $500 billion of market cap, you can't look away from that, right? But definitely, I think, as I said at the top of the program, the Fed talking about tapering affects much more. I mean, the U.S. stock market is a $50 trillion market cap, and then you got to talk about all the FX and bonds in the world. It's just huge.
Right. And Matt, on crypto, it's also always our most read story. So we have the data. People are interested. Kaylee, what else are we seeing in the markets?
Well, what I'm really looking for in the markets is any other asset that can move $10,000 in a single session. I'm going to use the power of the Bloomberg terminal, see if I can find that, because I'm not sure there is one out there. That's why we had so much attention on crypto yesterday. But as for what's going on in the broader market, of course, it does have to consider the Fed at least whispering about talking about tapering. And right now, it's interesting. We're actually around session lows, both in Europe and in the futures market here in the U.S. The Stock 600 was higher as much as 0.5% earlier, now just fractionally lower. And S&P 500 futures are pointing to a softer open in about 4 hours' time, down about 24 points. In the bond market, we did see yield moving up on the back of those Fed minutes yesterday, but as traders try and digest exactly when that taper talk is going to begin, yields are moving down just about a basis point to 1.65%. And then, of course, Matt, I have to mention crypto. I know that the Fed is important, but this is important too. Bitcoin still below $40,000, but well off the $30,000 it hit at one point yesterday. And with that slight recovery we're seeing in Bitcoin, we are seeing a number of crypto-related stocks on the move in pre-market trading. Interestingly, though, off of the highs of the pre-market session. Riot Blockchain is now flat, actually, in early hours. Coinbase is up just 0.5%. It, of course, was dealing with outages amid the turmoil yesterday. Tesla is also lower. And the ARK Innovation ETF, this is an interesting one. Cathie Wood, of course, a crypto bull and a Tesla bull. She used the opportunity to buy the dip yesterday in Coinbase and Tesla. Those were added to some of her exchange-traded funds, but one of them, that ARK Innovation ETF, is down about 0.8% before the bell, Matt.
Yeah, well, listen, I think it's interesting that for a while, Bitcoin was talked about in some corners of the market as a hedge, and that didn't really turn out very well. We should point out that gold, you know, just a couple months ago, dropped down below 1,700, and now we're looking at gold at 1,870 at troy ounce. So that might be an interesting hedge. I got a chart here that my old friend Hillary put together, my erstwhile television producer. It shows correlations, and I'm often pretty dubious of correlations, but what this shows is that bonds haven't been this correlated with stocks since 1999, which you know, Hillary was like 7 in 1999. So it's been a long time for especially those millennials and Gen Z kids out there since we've seen this. When I was a kid, we talked about a 60-40 portfolio. That seems pretty useless right now because basically, Francine, bonds just have completely lost the ability to hedge.
Yeah, I don't know why. I mean, your friend is also called the Queen of Charts. That's how Hillary's referred to, Matt. So let's just get her title straight. She does most of our charts, and she does a great job day in, day out. So to talk about your wonderful charts, Dan Curtis, also a shout out to him. We're joined by Michael Strobeck. He's a Global Chief Investment Officer at Credit Suisse. Michael, thank you for joining us. I don't know whether I should start talking to you about crypto or whether we start talking about bonds and equities. What do you think is more interesting, actually, in the markets right now? What is the question you get the most by clients?
The number one question, Francine, that we get is, on the one hand, what am I going to do with my equity allocation? Many have missed this powerful rally. And is inflation and interest rates going to be a problem if I jump on that train now? And I'd say to all that, you've got to position yourself probably short-term for a dip in equities. We've come tremendously far on this rally since the lows in March last year. And we are going into what we call a fog of macro data that indeed can lead to short-term surprises on the inflation front and maybe a bit of weakness on the growth front. And that's sort of a mix that will trigger some uncertainty and potentially a small correction in equities. That's what I worry about much more than what cryptos are doing, to be honest.
Okay, so you worry about that, but are you confident that at least when it comes to inflation, that the central banks have this and that they will telegraph it before doing anything that could lead to a market meltdown?
Yeah, I think they have it. I think, honestly, they have, of course, as well, a strong interest in markets steering through a phase of uncertainty about where inflation really will sit as we come out of this pandemic. And I don't think that they will be inert to react very fast just because of market volatility or gyrations. That's a good, actually, way of finding a new equilibrium, maybe a more sustainable path. I think it's still going to be upwards in equities, but I do think that we need a bit of a break, a pause, a wash out, maybe a rotation so that people come off some of the trades that they've taken because of the pandemic and they start looking forward as we move into a more normal world than what we've had in the last months.
But right now you think there is reason, Michael, to take some profits off of the table if you have participated in the equity rally?
I absolutely think so, yes. I think these summer months, the next maybe 3, 4, 5 weeks are going to be quite critical for the next phase of this market in terms of its upward move. We need to digest that the pandemic is behind us. Certainly in economic terms, it's really behind us. All indicators are pointing to one of the sharpest recoveries in economic history, world trade at all-time high, people going back cruising, and all kinds of stuff. Everybody wants to get up, and we all know that. But we also know that this is, of course, not either a new normal. And I think the next 4 or 5 weeks will show how much have we overshot in the short term, and how much is inflation a problem because of the stimulus we've gotten, central bank intervention, and the shortages that have taken place in the global economy, because not everything has worked truly well. We still have shortages here and there. Maybe that puts points on pressure. And lastly, commodities have been on the roar. They may press on headline inflation. And I just think that it's wise to just take some profit off if you participate in this. Don't chase this rally. Don't be overweight right now. Certainly in some of those sort of high beta sectors that we've seen rally so sharply, and prepare for a rotation. And I think that rotation is going to swing into value, to European stocks, and to stuff that's just really very attractively valued.
Well, and that's tactical, Michael, but I wonder what it means if a few months down the road, towards the end of the year, the Fed starts talking about tapering, or even actually tapering indeed. How does that then affect this equity rally?
Well, look, I think if it's well flagged and signaled, the market can digest it. Markets, as we all know, hate uncertainties and surprises, and Fed policy, of course, is the number one driver of, if you will, stopping a bull market or at least slowing it down. I think they know this extremely well too, and I think they'll be very smart and wise about how they start talking about it. And they'll look at unemployment levels in general to see how fast should they go. And if they see those come down, we will go into a tapering towards the end of this year and early next year.
Michael, if you're pulling back on risk, taking some profit, do you want to be sitting maybe a little bit more in cash? Is there a better place to put your money?
Yeah, I would go to cash. I would certainly not go to government bonds as you just discussed, because of their very poor hedging ability in any portfolio at this stage at these levels. And just be ready for the next phase of an equity upward move that is going to come more from, as I said, value from Europe, from perhaps more interesting cyclical European markets, like in our case, Spanish equities. We actually have begun liking more, UK, and also financials we think are set, especially in Europe, for a good next move upwards.
Michael, thank you so much. As always, Michael Strobeck there, Global Chief Investment Officer at Credit Suisse. Now, coming up, addressing the shortage, the largest chip manufacturers and U.S. automakers gather virtually today for a White House summit. So we'll talk about chips and we'll talk about industries affected. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua in London and Matt Miller in Berlin. Well, the White House is holding a summit today to try to address the semiconductor shortages that have rocked global supply chains. U.S. Commerce Secretary Gina Raimondo has invited some of the world's key players, including Amazon, Samsung, and TSMC, along with the major automakers. Joining us now is William DeGale, Lead Portfolio Manager for Technology at Blue Box Asset Management. William, what can the U.S. government really do to help the situation?
Well, I think in the short run, probably not very much, to be honest. I mean, from the American point of view, they could put a bit of pressure maybe on suppliers to favor American manufacturers, but other countries will be doing the same. And in the end, they're probably mainly governed by contractual obligations for valuable chips anyway. So in the long run, the US could encourage the creation of more factories, fabs for semiconductors on US soil, or just build up capacity. But it takes at least a couple of years to build new capacity for semiconductors. So that's not going to be an easy fix either.
But William, is this not like it's like the space race? Like it doesn't actually matter how much. This is for national security. And what will, is this where we're heading?
Well, certainly an element of that. I think the world has woken up suddenly to how much of the leading edge capacity, the most sophisticated chips are being built in Taiwan, very close to China, potentially hostile, and in Asia in general, and that a lot of that manufacturing has moved offshore from Western countries, and some of that needs to come back. I mean, there is capacity in the US, there is leading edge or near leading edge capacity in the US, but I think there's a view now that needs to be built up quite a bit, and if that takes quite a few $1 billion, that's just the cost of doing it.
Is there an investment opportunity as we reshuffle, as we move supply chains around the world, William, as governments get involved to try and make sure something like this doesn't happen again? Can you make money, or is it too late?
Oh, no, I definitely can. So if what's going on here is that capacity is being added in new locations, pretty much whatever the cost for security purposes, then more money will be spent on chip capacity than before. There will be duplications, there will be inefficiencies. And therefore, the companies that are making the equipment for that capacity will do very well out of it, because they might sell twice as many machines as they did before. So there's certainly considerable scope to make money out of the companies that make the machines that make the semiconductors. They're up very strongly in recent months, but my guess is they'll go on going up. Those orders are going to be extremely strong for at least the next year.
Are we going to see then the capacity brought home to the US, to the UK, to Europe, you know, the developed world, which has lost out on this kind of manufacturing capability, but invented it? Is that going to move? Is that going to move back?
So some of it clearly is. So, I mean, TSMC is, so Taiwan Semiconductor Manufacturing, it's the lead manufacturer of outsourced semiconductors, so you can pay it to make your chips, right at the leading edge. They have talked about plans to build not just one fab in the US now, but a group of these factories for making semiconductors. Europe seems to be having less luck in attracting that capacity back. So I suspect the US has got more spending power and will probably splurge more subsidies on it. So that's probably one reason. But in the end, you need to have a cluster of these factories. Each of them is absolutely enormous. But just one on its own is not particularly economic. So you need to have several in the same place.
William, you talked about the investment opportunities on the supply side, the companies, you know, producing these chips. What about the demand side, the companies that need them? How do you handicap this shortage issue for some of these tech players, for example?
Yes, so I think the larger the buyer relative to the seller, the more power the buyer has to actually get what they need. Contractual obligations will help. So if you need very expensive, very sophisticated chips, you've probably got a contractual right to have a significant quantity of those in any given period. But actually the vulnerability often is with the cheaper chips, the more standard ones, because there are thousands of buyers and there's probably much less contract in place. You sort of buy off the shelf as it's produced. And even the most expensive machines use lots of very cheap chips as well as the expensive chips. So it's a problem which could be pretty widespread. I think it's going to be quite difficult to pick out the buyers that are going to lose most or least, basically. It's easier to pick out the chip companies that are going to do better. Those that have got their own capacity will do better. Those companies that are making the equipment will do better.
William, thanks so much. William DeGale there, a lead portfolio manager for technology at Blue Box Asset Management. Now, coming up, the EU Commissioner, Paolo Gentiloni, feeling all in all optimistic about the recovery. Part of that interview is coming up shortly. This is Bloomberg.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We have, from one side, the vaccination campaign that is growing after initial delays now, with good speed and with very strong coordination among member states in the European Union. And second, of course, that we factored in for the first time in this forecast the impact of Next Generation EU. And this is the reason why we estimate to have growth of 4.2 and 4.4% in this year and next year. And these are rather good figures, as you know, for the European economy, which is not an economy accustomed to very, very high level of growth. So a little bit of more optimism, but of course we still have a certain amount of uncertainty connected to variants of the virus and to the nature of the recovery.
Well, that was the EU Commissioner, Paolo Gentiloni. You can catch that full interview as part of the Bloomberg Business Week starting at 10 a.m. in New York, 3 p.m. in London. We talked, of course, about the vaccination efforts in Europe, the disbursements of the EU Recovery Fund, the delay in certain cases of that being handed out to member states, and, of course, taxation. That's probably the big one, reforming the taxation system worldwide. Now, we're joined by Tom Keene, co-anchor of Bloomberg Surveillance. Tom, I know you're focused on the S&P 500 today, but overall, look, it's pretty incredible that the Fed is getting, not as much love as in previous days because of all the focus on crypto.
Well, there's a lot of mystery out there. There's the Bitcoin, what we saw yesterday with Bitcoin, and of course the recovery we see today to a 40,000 print moments ago. But we are watching the markets, and what's amazing, Francine, in the new interior volatility, we've gone nowhere. The chart's real simple, and it just shows a simple 2% pullback that we've seen in the Dow. Here, the Standard & Poor's 500, and granted, the NASDAQ 100 with that tech weighting is a negative 6%, negative 5.6%, whatever, but it's in a significant stasis. It's a steadiness here when everything's considered back another number of weeks. But then you got to get through the day, Francine, and getting through the day here will be sport.
It certainly will be sports. I mean, what we heard from the Fed yesterday was really the first indication, Tom, that, some Fed officials had actually thought or, had started having a serious conversation about pulling back monetary help. And is the key finding out who they are?
Less so. I don't play that parlor game. I really don't. I look at what they say, the consistent theme, and when you see a change amid a given person, particularly Vice Chairman Claret, I would really focus on as being a key theorist there, maybe Charles Evans of Chicago as well. But when everything is said and done, Francine, the Fed's going to wait and see what the news is. They're starting to see news. There has been a shift, Francine, in the last 2 days. The real yields are really starting to come in. That's been a sort of a backstory beneath Bitcoin and the losses I've taken on the Doge.
On Bitcoin? Fully invested in Bitcoin?
Yeah.
The 12-year-old still day trading on the sofa. Tom,
on the sofa, yes.
Tom Keene, co-anchor of Bloomberg Surveillance. As Tom says, we have to get through the day because there's quite a lot going on. Kaylee, you're watching crypto.
I'm watching crypto. And when I say I'm watching crypto, Francine, what I really mean is I'm going to have one eye on a tick-by-tick chart of Bitcoin and the other eye on Elon Musk's Twitter feed. Because are we going to get another diamond hands tweet, maybe a rocket ship, maybe an up or down arrow? Who knows? But whatever he says, as we have seen over the last couple of weeks, does have the potential to move this market. So you have to pay attention to both things at the same time, Matt.
Yeah, well, it'll be interesting to see if he still has the power to move this market the way he definitely has over the last couple of months. I'm watching Major League Baseball to see if there'll be another no-hitter, because what we are seeing this season is truly amazing. There's a picture of Corey Kluber there after he threw a no-hitter yesterday for the Yankees. Spencer Turnbull threw a no-hitter for the Tigers the day before that. We've had now seven no-hitters, if you count a 7-inning game, which I count that as a no-hitter. And for European viewers who are watching, the problem here is that over the years, pitchers have gotten so good that the batters just can't get any hits, and it's bad for Major League Baseball. But it's fascinating, obviously, if you have a love of the game.
Yeah, and Matt, for also our European viewers, if they need one-on-one pointers about the rules, they can reach out to you directly. What I'm watching is really data indicating that the mRNA vaccines mean that there's a less chance of transmission. So it does seem, once again, that not all vaccines are created equal. Coming up in the next hour, Russ Kostridge, BlackRock Global Allocation Fund Portfolio Manager. This is Bloomberg.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
A situation historically where the Fed has not begun to normalize rates and there's an inflation concern in the markets.
I do worry that after a 2021 boom, we're going to slow perhaps more than people expect next year.
People, they don't like inflation. This is true, but they will tolerate it.
We have a very different set of both market and monetary circumstances and economic circumstances right now.
Make no mistake, there's nothing supernatural about the U.S. economy. We've just given it a lot of extra adrenaline to run on with the fiscal stimulus.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV alongside Tom Keene. I'm Jonathan Farrow. Lisa Abramowitz. Equity futures are down about 0.5% on the S&P 500. We're off 21 points. And finally, guys, I think we're talking about it in the Fed minutes. That must be the most overused phrase of the last 24 hours, Tom.
Yeah, I'm going to let you guys cover that. To me, it's no big deal. It's just the beginning of talking about it, and they will wait for the economic data John, and most of that will be GDP, that presumed tail-off that we're going to see in GDP. Will that occur? What I'm looking at is market stasis, John, which is frankly comforting after what we saw yesterday.
Lisa, are we prepared to call it no big deal?
No. I would say that this is actually a big deal because we're starting to get the sense that
See,
people
that
are getting a little bit more
across the
concerned.
kitchen table, no.
I mean, I'm not going to mince words. I think that it was significant. I think that they're beginning the conversation. How quickly they're going to accelerate that conversation, how fringe this conversation really is versus the actual voting members, all up for debate. But still, we are talking about, thinking about, John, and this is a big deal.
Who is talking about it? I think that is key. Who is talking about
true.
it?
No, you're
and
fair.
I've said it's often the case that the minutes are a platform for the hawkish minority on the Federal Reserve, and to some degree I think yesterday was no different, Tom, though we have to say it's more than a couple. It's a number, so it's more than just Kaplan and Bullard. That's notable. I also have to say, though, this predates the payrolls report, and in that paragraph that everyone's been quoting for the past 24 hours or so, it discusses a rapid recovery, the continuation of a rapid recovery. I don't think the payrolls report speaks to a rapid recovery in the last month in this country.
I'm just not going there. I'm going to the data and what we see on the data, and they will act when they act. And with that, of course, is the gaming of the market and trying to guesstimate where we are. I'd focus on the retail earnings numbers we saw yesterday, John. They were absolutely extraordinary, and importantly, that good guidance. Granted, that only gets you out 3 months, maybe 6 months, where in the Fed parlor game, we're trying to get out 1 year or 2 years.
Earnings season has been pretty tremendous, and Lisa, the guide, the look forward has been pretty decent from these retailers in the last couple of days.
Yeah, and this speaks to the dynamism that, frankly, other central banks around the world are responding to. And, John, you've been out front about the ECB and how they may be the more interesting meeting. What happens if other developed market central banks start moving ahead of the Fed? What does that do for the Fed? What does that do for a Fed that is more aware of some of the financial stability risks in tandem with the ECB and others?
What I thought was really strange about the ECB's financial stability review was the following quote: a 10% correction in US equity markets could therefore lead to a significant tightening of Eurozone financial conditions, similar to around a third of what we saw in the coronavirus shock of March of last year, or March of 2020, Tom. That really gets your attention. Just a 10% correction would lead to something that vicious in Eurozone financial conditions.
Well, yeah, in Europe you're seeing it, but John, let's go to the yields. I know you're going to do this in the data check. The big thing the last 2 days, folks, is not Bitcoin. It's that the real yields have finally begun to nudge up. It's tangible to see a lesser negative 10-year yield and to see the march of the German 10-year yield negative 0.094. John, published moments ago, this is Oliver Chen on Target, targets leading investments in store labor with starting wages at $15 an hour is resulting in high engagement. I mean, that to me is more germane than the policy game of the Fed.
We're going to see much more of that, and we'll have this debate through the morning. Let's get to the price action this Thursday morning. Good morning to you all. Your equity market down 22 on the S&P. We decline a 0.5%. Tom talking about the real yield. Here's the nominal. Yields in a single basis point to 166.08. In a commodity market, talk of sanctions being lifted maybe in Iran. We'll talk about that a little bit later. 62.43 on WTI. And euro dollar, Lisa, just south of 122 at 121.87.
Here's what I'm looking at today, in addition to, of course, market response to the talking about, maybe talking about tapering, in addition to a slew of other events. 8:30 a.m., we get the U.S. initial jobless claims. We used to peg our time to these jobless claims. We used to think that they were significant. Now it is a question. I might be more interested, frankly, in the Philadelphia Fed business outlook, especially with respect to manufacturing, supplies, supply chain shortages, et cetera, because the initial jobless claims have been so messy. Still expect them to continue a downward slope as people start to get back to work after the pandemic. At 1 p.m., interesting to watch this $13 billion auction of Treasury inflation-protected securities from the Treasury Department. Basically, how much demand is there for investors looking to hedge themselves against rising inflation expectations? Yesterday, Kathy Wood of ARK Investments came out and said that she was more worried about deflation in the U.S. than inflation. The raging debate continues. And then today, the U.S. Secretary of the Chamber of Commerce, Gina Raimondo, is going to be holding a summit on the shortages in the semiconductor chip industry. She's going to be having a host of CEOs from the biggest companies. The key issue here is what is necessary to bridge the gaps that we continue to see with a record wait time currently for people to actually get the chips that they order, John. A huge issue.
Tremendous respect for Kathy Wood, but do you think she was talking her book a little bit?
No.
I mean,
no.
Is the sky blue? Of course.
Deflation in America, low yields.
Hold on a second.
Capping growth equities.
But there is a question, and she was pointing to the recent decline in commodity prices as perhaps a signal of what's to come. What happens if the imbalance in the economy due to the pandemic, with people buying more goods than services, leads to an overproduction of certain key goods that then leads to price deflation in the future? It's something people are talking about. I would argue maybe disinflation is perhaps the better term than deflation outright, but still an interesting point to notice nonetheless.
Go on, TK.
I just don't get me going.
Please, go ahead.
Just talking her book. Yeah. I thought, Carol did a great job trying to tackle the moment. In Kathy's defense, this idea of showing your portfolio, whatever it is, daily, weekly, whatever, is really difficult. It's just really a distraction.
Jobless claims, 450. That's the estimate.
Yeah, I'm glad you brought it up. I'm glad Lisa brought it up because, frankly, folks, I'd forgotten it was claims Thursday. John, it's the most elegant chart in economics. If you want to define a trend, it's truly an elegant chart. It'll be amazing to see if that constructive trend continues.
Hopefully it does. The number drops at 8:30 Eastern Time. Let's bring in Russ Kostrich, shall we? BlackRock Global Allocation Fund Portfolio Manager. Russ, are we talking about it? And should we be talking about it this morning? How significant is it?
We're going to be talking about it one way or the other. Look, I think this is important. The Fed is likely to start to shift their policy stance in the coming months. It's not unrealistic to think you begin tapering in Q4. Having said all that, despite all the ink being spilled, a couple of points. Long-term yields have actually remained remarkably contained. We've never taken out the high from back in February and March. Bond market volatility is down significantly from where it was, again, back in February and March, despite the biggest inflation print in 40 years. So this is a big deal, but, the wheels are not coming off the vehicle yet. And I think that's important to realize. We still have a 165 10-year. Bond market volatility right now is still modest. So as of today, that helps explain why stocks are only down 3-4% from their high.
I mean, the correction has been a non-correction. Russ, can you buy the big techs here? Have they been unloved for a long enough time where they're actually a relative value of relatively unloved?
I think there are some opportunities in the big tech. Just to be clear, what we're talking about, I think it is the mega cap, high quality tech. It's not necessarily the more speculative names, the ones where earnings are 5 or 10 years out. We've actually been trimming those from the portfolio. But yes, if you're talking about high quality tech, it may underperform over the next 1 to 2 quarters if we get these gaudy GDP numbers and the cyclical trade continues. 2-3 years out, I think you want to own them. You want them in your portfolio.
Meanwhile, as we talk about portfolio construction, Russ, there is a question of whether treasuries can provide truly a hedge for equities at this point, especially given the negative correlation that's gotten it, by one measure, to the most since the 2000s. What's your sense right now, early 2000s, I should say, what's your sense of how hedge-worthy treasuries really are?
Right now, not much. The reality is things have changed. And if I look at stock-bond correlations, everyone knows they're ticking up. What's been less discussed is the fact that equity market volatility has remained elevated compared to bond market volatility. That wasn't a couple months ago, but the reason that's important, the reason it's affecting the efficacy of the hedge, is that tells you how convex a hedge it is. What you're seeing is even in these days when the market is down a couple percent the way it was last week, either bonds are flat or they're up a little bit. They're not giving you that big movement that made them such an efficient hedge the way they were a couple of years ago. And that's a big change. We don't talk about that a lot. We talk about Bitcoin. We talk about the Fed. If you're building a portfolio, the degradation and efficacy of bonds as your primary hedge is a big deal.
Just to be clear here, Russ, you were the first person to mention Bitcoin on this program so far this morning. 10 minutes in. Just to be clear about that. Russ, just finally and quickly, are you still nursing that cash position? Do you still sit on that going deeper into summer?
We do have the cash position. Again, it's the flip side of that being very underweight duration. Everyone's got a volatility they look to manage their portfolio to. in the absence of duration, you need other hedges. Part of it is cash. There are other things as well. There's vol as an asset class. There's FX pairs. But in a world where you're not getting that convexity from duration as a hedge, you're going to run with more cash.
Russ, thank you. Our best to the team. Russ Kostrick there of BlackRock, the Global Allocation Fund Portfolio Manager. Your 10-year this morning at 166. And to Lisa's question, just a conversation, Tom, about the substitution for duration. If we get that risk-off move, where do you get the protection?
Well, the bond dynamics right now, you know, that we throw these words around, John, duration, convexity, and the rest of it. It's still a mountain of cash that's out there, including what Russ has, a mountain of cash, given absolutely original fiscal and monetary policy. I'm not sure the bond market sends signals I'm familiar with.
It's pretty simple at the end of the day, and we can make it simple without the jargon.
Look at the real yield.
On days when things are bad, what is green on my screen? Or what is not red? And Lisa, right now, Treasuries can't guarantee you that.
Yeah, Liz Ann Saunders actually came out today. I thought this was really interesting, of Charles Schwab. And she said the rolling 60-day correlation between 10-year Treasury yields and the S&P 500 is in negative territory, and about the most negative since the mid-2000s, just highlighting this lack of protection that Treasuries really are providing.
It's a big challenge right now. We're coming in a basis point on a 10-year. We'll continue this conversation with Evan Brown of UBS Asset Management. We'll do that at 7 a.m. Eastern Time, and at some point, someone else might mention the B word. Equity futures down 20 on the S&P.
New drinking
down
game.
0.5%. Yields in a basis point on 10 to 166. From New York City this morning, good morning. Tom Keene, Lisa Abramowitz, Jonathan Ferro.
I didn't sell the Doge.
Equities pulling lower. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. In Iran, President Hassan Rouhani says a broad outline has been reached to revive the 2015 nuclear deal and remove economic sanctions. Rouhani says differences remain over some issues. A top EU official said yesterday that Iran and the US were close to a deal. Talks have been going on in Vienna. There are media reports that Israel and Hamas are near a possible ceasefire deal. That's after President Biden urged Israeli Prime Minister Benjamin Netanyahu to wind down the conflict. According to the New York Times, the deal would unfold in stages. Israel would quit attacking the Hamas infrastructure, whilst the Palestinian militants would halt rocket attacks. And China has released the first images from its Mars probe. The spacecraft landed on the red planet Saturday. It's carrying a rover which will explore the surface near the landing site. China is the second country after the US to send a rover to Mars. And the co-founder of Apollo Global Management, Josh Harris, has decided to step down from his day-to-day role. Harris wants to return to his roots as an investor and entrepreneur. He will continue to serve on Apollo's board and on the board's executive committee. And the Democratic-controlled House has voted to create a commission to investigate the January 6th insurrection at the Capitol. 35 Republicans broke ranks with their leadership to support the probe. But the legislation's fate in the Senate is uncertain. Republican leader Mitch McConnell is opposed. Democrats would need 10 Republican senators to vote in favor of the investigation. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there has been a partnership between governments and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada is going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
If Russia acts aggressively against us, our partners, our allies, we'll respond. And President Biden has demonstrated that in both word and deed, not for purposes of escalation, not to seek conflict, but to defend our interests.
That was Secretary Blinken there from New York City this morning. Good morning. Alongside Tom Keene, Lisa Bramvitz, I'm Jonathan Ferro. Counting you down to the opening bout 3 hours away is the price action. Equity futures down 22. We decline 0.5%. In about 2 hours and 12 minutes, we'll have jobless claims in America. The estimate so far, a drop back to 450. We want to see that continued, a continued drop in claims. In the bond market, yields lower by about a basis point, 165.74. And in foreign exchange, Tom, muted here on euro dollar, up about 0.1%. Stronger euro. Euro dollar 121.84.
Yeah, John, a good litmus paper for this is the VIX, the volatility of the SPX, and at a 23.21, it's midway between the 27 angst that we saw a number of days ago and the Nirvana under 20. That's sort of where we are right now at 23 level. What is the angst in Washington? Jet Fitzpatrick joins us now, Bloomberg's Washington social reporter. Jack, I'm absolutely fascinated by the symbolism of 35 Republicans on this commission on January 6th. Not so much about January 6th, but the symbolism of 35 Republicans crossing the aisle to join the Democrats, or did they not cross the aisle, they just joined the Democrats? What's the nuance there?
Well, it's interesting that there was such a substantial number of House Republicans who did end up joining the Democrats and supporting this bill at a time when Senate Minority Leader Mitch McConnell said he is now against this. So this is going to go to the Senate, and now that leadership has taken a clear stance against the bill, despite the fact that it would create a 50-50 commission in terms of Republicans and Democrats, it seems doubtful that such a high number, equivalent in the Senate, number of Republicans would come on board if you've got leadership starting to whip against this. So that 35 number may be the high range, because we're seeing movement in Washington where Republican leadership comes out more strongly day by day saying, we really want rank and file members to oppose this.
But as the Republicans reset, are those 35 Republicans seen as abandoning the Republican Party, or do they just decide to support the Democrats? Which is it?
That it could definitely be a controversial move. This isn't the kind of bill where you get to vote with Democrats and there will be no repercussions. The major issue in primaries going toward 2022 will likely be, did you stand with former President Donald Trump through everything he wanted you to stand with him for? And Trump does not want this commission, at least that is the expectation among many Republicans, that Trump doesn't want this commission to go forward. Spot spotlight on January 6th does not help that faction of the party. So to see almost 36 Republicans side with the Democrats on this, that's a significant vote, and that could be the kind of thing that comes up in their primaries.
Tom, I got to say, we talk all about these proposals and these measures and these initiatives, and we wonder what actually will get passed, what actually will have consequence for markets. One thing that a lot of people are saying will have consequence for markets is the B word. I had to bring it back, Bitcoin, and some of the volatility that we've seen, not only with the price, but also in some of the platforms that transact some of the crypto assets. Can you give us a sense, Jack, of how much urgency there is on Capitol Hill to create some sort of regulatory framework for Bitcoin, akin to what we've heard from China and akin to what a lot of people are asking for, given the recent volatility that we've seen in the price, as well as shortages and outages in some of the platforms?
Yeah, we're still kind of in the early stages of that conversation in Washington, because that regulatory conversation is not in the top level of legislative priorities that Biden has been pushing. It would probably have to, if you're really looking for legislation that could become law, it would be after we get through all of the infrastructure talk and the human infrastructure talk and even the climate issues that Democrats want to bring up. It is the kind of thing where you're hearing some members get more and more vocal about some oversight on this. But in terms of translating that into a bill that could get a markup and actually have a chance of becoming law, we're not quite there yet, because we're still on the top legislative agenda of the Biden administration.
Jack, when Biden came into office, one of his promises was to restore a view that government could work, the government could actually get things done and make proposals that could actually make the economy, make people in a better place. Is there a sense that he has changed anything on Washington, in Capitol Hill, based on the progress with some of these bills, or does it seem like the machinations of these negotiations are just stuck in the same trends that we saw pre-Biden?
Well, if you ask Democrats that kind of question, they would say the initial stimulus was a big step forward on that. There is a significant campaign promise that people would get $2,000 checks. They got $1,400 plus $600 checks, which basically counts. Democrats won the Senate largely because of that kind of promise, because of the race in Georgia, and ended up delivering on that. So even if that may have seemed like a bit of a politicized giveaway, that's a significant thing for the president to come in and very quickly back up a campaign promise. He did also promise more bipartisanship, and there seems to be some progress there with an infrastructure bill. We're maybe halfway through that process, so it could still fall apart. But politically, yeah, a lot of what we've seen that has pulled well for Biden has probably pulled well because he's managed so far in the early stages to back up some significant campaign promises.
It gets harder from here, that's for sure. Jack, thank you, sir. Jack Fitzpatrick there, Bloomberg government reporter down in D.C. I'll be catching up with the chair of the Council of Economic Advisors, CC Rouse, Dr. Rouse, a little bit later this afternoon, Tom. We're going to talk about the philosophy of the administration. I think we've got a real clash of philosophies across the country right now as we continue to count up the states in America that have removed that additional UI. Of course, all of them Republican states, Republican governors who believe in their position, in their view, for their states, they believe that additional UI is holding back employment.
I love that, John. That jargon is great there on the unemployment insurance or whatever it's called.
Thank you for
John,
translating.
Thank you. It's absolutely unreal. We forget how original this 2021 is. The only analog we have in the modern day is 1947, 48-ish, I'm going to suggest. And it's not even that, John. This is just, I mean, when you speak to this wonderful guest today, I mean, it's just original where we are right now.
I think that's where I'll begin. Lisa, it is a struggle to find a historical parallel for the moment we're in.
And it's a struggle to understand what's causing what, right? The fear that possibly some of these enhanced unemployment benefits are keeping people out of the workforce. The data on that, the studies on that are conflicted, and it's too early to really determine one way or another. Anecdotally, that's what businesses say. But how do you respond to that when there still are people who cannot get back to work, John?
Yeah.
This is the struggle.
There are clearly childcare issues in the mix as well. For many people, we're still in a pandemic. Equity futures this morning, they do decline. We're down 18 points on the S&P 500. 500. We're off by about 0.4%. In the bond market, yields are lower by about a basis point. Just a break of 166 here at 165.91. From New York City, alongside Tom Keene, Lisa Abramowitz, I'm Jonathan Ferro. For our audience worldwide, counting you down to the market open 3 hours away, this is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the